Good afternoon, everyone. Today, I welcome you all at the Global Fintech Summit. Thanks for joining us. I hope you're expecting more guests to join in quickly. So let's start the event. Let's start this summit. So today we have joined. Let me give you some introduction before we begin on this. So I'm Tushar Maheshwari, and I've been in the marketing and brand strategy industry for close to 15 years now. We have worked with many global brands across the globe, top 500 Fortune companies we've worked with, and we have worked with various industries, be it FMCG, BFSI, white consumer goods industry, retail, real estate, and we have got presence in Singapore, in India, and Middle East. So after doing more than 1,000 shows across the globe, now we have identified a couple of sectors and upcoming technologies. So here we present to you the Global Fintech Summit. So the main idea behind organizing this summit is that the most sacred institutions, financial institutions, are based on trust, and technology brings trust. So more the transparency, better the trust builds up. So what better way to put transparency and technology together than the blockchain? So this summit today will address the key points of blockchain, how this brings transparency to the whole system, what are the benefits of it. So here I present to you to discuss and to take this summit forward, Mr. Deepak Parekh. So Mr. Deepak Parekh is a technology pioneer at World Economic Forum. He has already mentored many startups and helped them to achieve big feats. He's already on the boards of various top companies in India and globally. So Mr. Deepak, over to you.
Hi, Tushar. Good to see you. You'll have to allow me to share my video.
Oh, sure. 1 second. Screen sharing, you meant to say?
No, just a video. You'll have to enable me to share my video. I cannot.
Okay.
Okay, so here we go. Thanks a lot, Tushar. It's always pleasure to be in events organized by you. In past, I've been speaker and I've talked at a lot of events you put across, predominantly in EdTech sector. And many of my friends who have joined today, they would have known me in my avatar of someone who have been very close to agriculture and talking about EdTech in India as well as globally. Today, I'm taking a role of someone who will be moderating some of the awesome speakers in fintech industry. And one of the reasons I'm today speaking on fintech is sheer passion for what's happening in fintech sector itself. I've been a big promoter, influencer when it comes to blockchain, but to a certain extent, limited to agriculture. But as you know that we all have our own learnings and all understandings, and we try to get out of our comfort zone. And that is what I would be doing today. And I will request the audience to pardon any mistakes I do. So if we talk about fintech, it is rapidly changing the face of financial sector as the most financial ecosystem players are now switching to digitization. They're looking more towards paperless, cashless processes. I see some of my friends from banking industry in the audience. They would understand how painful it is to deal with papers. As someone who started his career as a banker with Export-Import Bank of India, way back in 1998, I understand the gravitas of challenges imposed by dealing with papers. For those who are uninitiated, the fintech is a term used to describe emerging digital technology that aims to improve and automate the delivery and usage of financial services. When it was first coined way back in early part of 21st century, it had a very humble beginning. It was just simple backend for financial organization to manage their day-to-day business. Today, fintech has emerged as a segment in multiple sectors across multiple functions and include technologies as interesting, as cutting edge as artificial intelligence, IoT, blockchain, and many more. Now, coming back home, you'll be surprised to know that India has the highest fintech adoption rate globally. We always look at the developed world for fast technology adoption. Today, India has the highest fintech adoption rate of close to 87%, which is significantly higher than the global average of 64%. One of the key reasons behind this is the enabling environment. Multiple governments has consistently tried to build upon what the previous governments did. And today we are having three very strong pillars to support fintech, and coined as JAM Trinity. The Jan Dhan accounts, Aadhaar-based biometric validation or KYCs, and pervasive reach of mobile, with nearly every Indian having access to these three facilities. India is also amongst the fastest growing fintech markets in the world, especially amongst the large one. The leader is definitely US, followed by China, and India is third. The fintech revolution has been happening for now close to a decade in India, but the impetus has been in last 5 years. Nearly 67% of roughly 2,100 fintech companies existing in India was set up in last 5 years. In December 2021, at the launch of a thought leadership forum on fintech, Honorable Prime Minister of India, Narendra Modi ji, called for a fintech revolution in India with a security shield. He said primarily it is to drive the well-being of the people, as it is driven by income, investment, insurance, and institutional credit. We should be proud that Indian fintech industry has seen cumulative funding of close to $27.6 billion. Today it is valued at roughly between 50 to 60 billion US dollars. We would be adding close to 100 billion more as valuation in next 4 years. And not just the investment. The reason for these investment to flow in this sector is that the total market for fintech is currently estimated at 31 billion US dollars, and it is growing at a CAGR of close to 22%. Only EdTech and EdTech are other which are even close to this growth. The fintech transaction itself, the size of it is expected to grow from current level that was in 2019 when the last data was available of $66 billion to close to $138 billion by 2023, doubling every 5 years. So India fintech industry ecosystem sees a wide range of subsegments, including payments, lending, wealth technology, personal finance management, insurance tech, and some of the neo players which are redefining how we use our credit cards. From Slice to Unis to One, they are really giving tough challenge to the traditional banks who have been offering credit cards. Same goes for the credit. I'll say industrial credit or commercial credit. We are seeing new NBFCs even bringing technology play in a traditionally old sector. And today we'll be talking about all these interesting things. Our first speaker, who also happens to be the chief guest, is someone who has been pioneer in taking forward the vision of the Prime Minister of India, Mr. Modi. So I would like to request Tusharji to connect us with Dr. Karad, who is Minister of State, Finance, Government of India. Over to you, sir. We look forward to hear from you all the wisdom and the vision the government has for future of fintech sector in particular and financial service industry in general. Over to you, sir.
Namaskar, Mr. Tushar Maheshwari ji, organizer E3 Integrated Fintech, dignitaries on the dais, dignitaries of the dais, and attendants of the Global Fintech Summit 2022. Last week, Madam Sitaraman ji laid down the paperless budget before the Parliament with a vision to create India a digitalized economy, starting a new journey in this Amrit Kal. One of the major highlights of this budget was the proposal for greater digitalization and the introduction of digital rupee using blockchain. This will be big push to our economy on its path to become a digital India. The pace with which India today is moving towards digitalization, data has become the new oxygen. In this situation, safe and proper storage of data is very important, whereby comes the role of blockchain. The big question that everyone asks today is why blockchain? And I would like to simply answer by saying that it because blockchain matches the values of India, that is transparency, cost effectiveness and scope for innovation. Blockchain as a concept can bring big changes in how we see banking and financial sector today. Under the leadership of our Honorable Prime Minister Sri Narendra Modi ji, initiatives have been taken to make the banking sector financially inclusive. Blockchains can act as a catalyst for this purpose. Blockchain can be of a great help for the handling various functions in the banking sector. This can really make the lives of customers and banks easier. For example, know your customer function. Today, bank maintain different KYCs for different functions. Unifying these system will help in combining all different KYCs. This way, customers will just have to give just one KYC and bank will also save more money through single location. Blockchain can help to keep information secure, while the ability to share a constantly updated record with many parties can simplify the administrative process by reducing unnecessary duplication of information and request. Through this, the credit system of banking can become strong. Frauds and NPAs can also be identified early. Distributed ledger technology can also help in providing faster international transactions with more efficiency. Financial processes, especially at the international level, have a reputation for being lengthy. Following traditional practices, which include various activities such as lending, issuing letters of credit, factoring and insuring the parties, it can take days up to weeks to complete a single transactional. This constant delay leads to huge amount of capital to be tied. But the blockchain, there is no need to keep several copies of the same document. That's because the information can be integrated into the digital document, which is updated in real time and can be accessed by all network members. Recently, the government through Niti Aayog has partnered with the Gujarat Narmada Valley Fertilization and Chemical Limited for implementing a proof of concept application using blockchain technology for fertilizer subsidy management. Currently, the subsidy disbursal takes 2 to 3 months time. There are multiple entities involved in the verification process, and the transaction process is very complicated, which has the potential to be automated to give significant efficiency gains. With implementation of the blockchain technology, it is expected that the distribution will become effective and efficient, and subsidy transfer could be automated and made real time. Blockchain has shown another concept called smart contract. A smart contract is an agreement between two people in the form of computer code processed by the blockchain when the conditions in the agreement are met. As you can see, smart contracts help you exchange money, property, shares, or anything of value in a transparent, conflict-free way while avoiding the services of a middleman. Recently, Copy Board under the Ministry of Commerce and Industry launched a blockchain-based copy e-market pilot project that integrates the farmer with market in a way that leads to reduction of number of layers between the coffee growers and buyers, and help farmers double their income. Use of blockchain application in this case would lead to transparent integration of farmers and market while realizing fair price for the producers. Moving further, blockchain is not just restricted to the financial sector, but the multiple and far more efficient applications in other sectors. I have realized that both the education sector and the health sector need efficiency and reliability, and I can see blockchains making that possible. In education sector, authenticity of documents needed from admission to employment, such as mark sheets, certificates, it can be ensured by immutable features of blockchain. Moreover, the blockchain possesses the potential to revolutionize the Indian healthcare industry by placing the patient at the center of the ecosystem, coordination, privacy, and security of health data. If patient records are stored entirely on a blockchain based server, locating at and accessing previous records of patient will be considerably quicker. Blockchain can act as a bridging mechanism between the major healthcare sector and hospitals, laboratories, and pharmacies, allowing data sharing amidst an encrypted ecosystem. Diagnostic records, past procedures, current medications, and insurance claims domain the shared data compositions, thereby ensuring 1.3 billion Indians a safer, reliable, and constant improving healthcare system. Therefore, it is safe to say that blockchain can solve 90% problems related to data management, and that too in multiple sectors such as real estate, crowdfunding, supply chain management, media, and advertisement, energy, and whatnot. Blockchain arguably is the most significant innovation since the internet, with individuals, companies, and even governments embracing the technology. Having said that, every technology brings in its own disadvantage, but identification of these weaknesses early would help in preparations to tackle the problems well before they affect the developed blockchain ecosystem. Blockchains has immense potential revolutionize our economy, and I request everyone to treat this as a start to many more innovations. I am certain that many more problems will arise in the future. However, I am more sure that we address them with a spirit of developing our country. On that note, ladies and gentlemen, I would like to end my address to you for today. Namaskar.
Talk by our Honorable Minister, Dr. Karar. So over to you, Mr. Deepak.
Thanks,
Yes.
Tushar. Thanks a lot. You'll also have to enable my
Yes.
video, and we already have our next speaker. And while he happens to be a close friend, right? And it always, like, it's a pleasure to have him in conferences and the events. And let me just introduce you to our next speaker, Sri Badri Narayan Gopalakrishnan. He heads the trade and commerce at Niti Aayog. He is applied economist with 20 years of experience and expertise in economic modeling, data science, in many areas such as international trade, energy, agriculture, industry and health, economic impact of new technologies like drones, robotics, 3D printing, nanotechnology, cloud, IoT, and for sure, the blockchain. He would be today talking about the policy aspect of blockchain. I would like to welcome you, Badri, and the floor is yours.
Thank you very much, Deepak. For some reason, my video is not working. I was able to start, but it's not working. So I hope. I think I'll just continue this way to avoid any delays. Apologies for the video, but thank you very much again, Deepak, for introducing me. It's great to be back with you in this forum, and I also thank the E3 event coordinators for this amazing workshop, webinar, and blockchain is a very important set of new emerging technologies, which is like the Honorable Minister just mentioned. It combines many things that were considered to be mutually exclusive. For example, we were thinking that transparency cannot go hand in hand with openness, or easy distribution, and also security, cyber security, and so on. So here, like, if you're very transparent, if you open up the content for public distribution, then it is in general we worry that there is a lot of security issues. And this blockchain technology is the first solution wherein we're able to do both simultaneously. It can be transparent, at the same time it's immutable and secure. So that is that fundamental principle, and even more importantly, the commoditization of trust. So trust is not dependent on any person anymore. It's all taken care of with technology. But there are a lot of wonderful things that can be done by blockchain, as all of you know here. I would particularly like to focus on a few things here. One is the potential economic impact of blockchain in general. So the main role that blockchain plays in the economy, it could play in the economy more and more in the future, is to eliminate a lot of intermediaries which cause inefficiencies in various sectors. I'm not talking about just one sector, but many sectors. So that leads to a huge increase in efficiencies in the economy. And I have tried to do some research on this before with some other collaborators, and the gains that can be availed just in if you take, for example, trade sector, international trade, exports and imports, that can be pretty huge. It can be something like $1 trillion, $2 trillion globally. So the reason is that there are a lot of difficulties faced by the exporters across the world, because of the lack of transparency and lack of reliability, credibility. So now when you use blockchain, for example, for exports and imports transactions, you can easily ensure that the the exporters can be very transparent and credible about their origin, where are they sourcing their components from, the entire supply chain, and the importers can be also confident about that. And this is a big this could be a big game changer. Exporters can reach out to the markets where they did not have access before because of this, and importers can get their products from various countries from which they did not have access. So this is one example. Likewise, there are many use cases and examples. In terms of fintech, a major aspect that I've looked into personally is this whole thing about trade finance. In this same example that I gave you for international trade, both the exporters and the importers, they need some working capital to be able to produce the goods that can be exported, and that is for the exporters, and to purchase the goods for the importers. So and that's a major challenge because many of them are unable to avail credit at reasonable rates, and forget about rates. Even getting credit is very difficult across the world. So now again, the main reason is credibility, trust, and transparency. Here again, blockchain can solve that problem. So if blockchain can get in and assure trade finance to the exporters and importers, that can again be a game changer. And there are other aspects to fintech where blockchain can be very useful. One example is the transactions. So a lot of if you take several states in India like Kerala, some of the northeastern states, and so on, there are a lot of remittances that happen both globally and within the country. We have migrant laborers who work in the Middle Eastern countries or the Western countries. And you also have migrant laborers who move from states like Bihar, Assam, UP, Odisha, West Bengal, to states like Maharashtra, Tamil Nadu, Karnataka, and so on. So these laborers, they have to have quick ability to quickly remit their savings, their earnings to their families, because a large part of these economies run on such remittances. So here, currently there are a lot of difficulties. One is, you have transaction costs. You have to pay fees to immediately transfer, particularly internationally, but also to some extent domestically. And then you have other time-related costs. How long is it going to take to happen? So this again, blockchain can solve this problem by good payment systems. So now briefly, these are all some examples and some research outcomes from my work and others' work. But I would like to very briefly touch upon the national strategy on blockchain that was released by Ministry of Electronics and Information Technology just a couple of months ago in December 2021. I hope all of you get a chance to read it. It's not a very long document, so it will definitely be worth your time to take a look at it. And I'm sure a lot of people would have already gone through it. So in this, the government has laid out a clear vision, mission, and objectives and scope, and even got into some of the technological and administrative aspects. So the main focus of this document is to lay out the the vision and the next few years of what is going to happen in this sector, thereby giving an idea on what would be the regulatory considerations and policy aspects and so on. So the major vision has been to create trusted digital platforms through shared blockchain infrastructure, promoting R&D, innovation, technology and application development, and facilitating state-of-the-art, transparent, secure, and trusted digital service delivery to citizens and businesses. thus making India a global leader in blockchain technology. So it's a very amazing vision, which is not only, we should note that it's not only to say that we are going to, come up with a blockchain infrastructure that's going to excel within the country, but our vision is to be a global leader. So that's a great vision to have. And in terms of mission, it is very consistent with the vision, ranging from governance services to both citizens and businesses, and evolving a digital ecosystem, and so on. And I don't want to go through each and every part of this document, but I want to mainly discuss about the, what has been done. Like the main question when we talk about blockchain that everyone asks in the industry and in policy and academia, wherever you go, is that what is the, we've been talking a lot about blockchain. What is happening now? Can you show me anything, any application that has been implemented? And we do have answers to that. We all know of different aspects done here and there. But I think it's important to see to what extent things have happened in our country, in India, with the involvement of the government. Not, I mean, in private sector, there are a lot of efforts happening already. We should also note that the government is very actively involved in it. If you look at this national blockchain strategy, there is a whole section devoted on national efforts. There are some efforts with MeitY, Ministry of Electronics and Information Technology, with some academic institutions. They have come up with a wide range of blockchain technology solutions. Particularly, proof of concept has been developed for cloud security assurance, central KYC, trade finance, which I was talking about earlier. Proof of existence framework has been developed for digital artifacts, academic certificates, sale deed documents, and so on. This has been developed particularly in the Telangana state. And these are very advanced for any standards, even in global standards. And particularly sale of deed is something that is related to smart contracts. That is really an amazing thing that can solve a lot of day-to-day problems that we see in India, like the implementation of the rule of the law. Property rights can be really strengthened, and as an economist, I can say that can make a huge difference to the economy. If you have certainty, if you have stability in terms of rule of the law implementation and so on, it can go a long way. NIC has established a center of excellence in blockchain technology, and they are doing a lot of work. They're offering pilot deployment, blockchain platform as a service, and so on. Currently, they are developing applications like blood bank, public PDS, public distribution system, land registration, which I also told you in the context of MeitY in Telangana, GST and excise management system. Then there are also other efforts, including my colleagues at Niti Aayog, which the Honorable Minister talked about before, on the Gujarat Narmada Valley Fertilizers and Chemicals Limited. The fertilizer subsidy has been optimized by using blockchain. And governments of Telangana and Tamil Nadu, they have come up with policy documents towards adopting blockchain technology. That is very important and very useful, because blockchain strategy need not be just national level, but they can also be at state level. And Reserve Bank of India is also applying blockchain technology in banking domain, which is basically what we may be most interested in, the fintech industry. And State Bank of India is also working on some pilot projects in this area. Several private sector banks are also working on it. And there are also some other aspects going on in the, there has been a blueprint of blockchain platform for banking sector, focusing on architecture, governance, and so on. So there are several such developments happening in the nudged by the government, started by the government, and also in industry. And I think there is a long way to go further. This is an exciting space across the world, and particularly blockchain applications in fintech can go a long way for the financial development of the country, and also, like it is just been rightly pointed out in the blockchain strategy, national blockchain strategy. This has to focus both on the citizens and on the businesses. So there is no trade-off. There is no conflict between the two. So we have to look at both the citizens and the businesses, and in a complementary, in a synergistic way. So with that, I conclude my brief speech. Thank you very much again for that.
Thanks a lot, Badri. It was really awesome. You gave the bird's eye view of completely what's happening across India. And you touched up various subtopics, including something which impact majority of India, because we are having a lot of migrating population who works in different states, go out of their home. Now the forum is open for questions, so please do share the questions. So the first question would be, Badri, for you is that India has slowly built its capacity on digital transactions, whether it is IMPS or UPI or BHIM. We have moved quite a lot. Just in October 2021, the total transaction peaked to close to 100 billion US dollars. Now, there is also a lot of talk about globally on central bank digital currencies. Definitely, I'm not looking at, I'll say that inside what government intend to do, because in the budget, we talked about India's own digital rupee. What are your views on blockchain for CBDC?
Thank you very much, Deepak. First of all, thanks for your nice comments, and this is a great question. I think definitely the digital rupee has been talked about not only in the budget but also by the discussion by the Honorable Governor of Reserve Bank of India, I think yesterday. So it's definitely a very imminent thing that's happening. In my personal opinion, I think blockchain has a very important role to play in digital currency. The main thing about digital currency is that for all practical purposes, we are already living in a world of digital currency, particularly in India with UPI, with all this digital transaction companies, Paytm and so on. We're already quite advanced. I can say from my experience living in the US that even the US looks up to India, like in terms of all these developments that have happened in the last few years. But the key, thing about digital currency is not transactions. Transactions we're already experiencing, what many other countries have not experienced. I think the key thing is things like smart contracts and programmability of the currency, programmability of various transactions. If you issue an invoice, that then it's not just a piece of paper or an online document, but also an undertaking which automatically takes digital rupee from your account on that particular day that you're agreeing on the invoice. So I think it's kind of like a much more advanced version of post-dated check. Right? So and I think for those things, there is a lot of scope for blockchain or blockchain-based technologies platforms to be integrated with a digital currency. I think I haven't looked closely into what the Chinese CBDC has done. I think there may be lessons to be learned from them if there are lessons that are released publicly by them, and some other countries. So I think definitely there is a role to play. But I think the challenge is, I think your immediate question may be, if blockchain can help in this regard, then why do we actually need digital rupee? Why don't we just use blockchain and go on with that. I think that is where the challenge is, because blockchain, although it's quite it can handle a lot of large scale transactions. Um, it's not very clear, and it's very unlikely that it can handle transactions of this scale, like at a country level, a country of 1 billion people. So I think this is an area where it has to be tested and tried, and that is where I think doing this like within the, like, if there are other solutions other than blockchain which can be that scalable, that's fine. One can go in the direction. But currently we have blockchain, and maybe at least at the pilot stage, this can be tried, and then it can be scaled up further and further. So I think that's I would say that given my limited understanding of the details of the technology, this is what I see. There is an opportunity and there is a challenge, but I'm sure something can be. It's all work in progress, and something will work eventually. But my brief answer to your question is, or my sense of a response to your question is this aspect that blockchain can play a role in not only in the transactions, definitely, but in transactions we already have a lot of other ways to do it. But on the other aspects like smart contracts and other programmability of digital currency, I think blockchain can play an important role.
Excellent, Badri. Very well articulated. And for sure, blockchain can and cannot be used for CBDCs. It depends on the side we want to take forward. So we are all very eager to understand, like, how the government comes out with the Indian rupee in a digital avatar. But now, again, talking more on a generic basis rather than very specific to what the government would be doing, we have seen that those countries which have tried to implement their CBDCs through blockchain, and when they try to make it interoperable with other cryptocurrencies, and as even recently it was mentioned by the governor of RBI, that it can lead to a lot of uncertainties and volatility. Do you see that can be one big deterrent for a lot of CBDC or those countries which are looking for implementing CBDC, not to integrate with the overall cryptocurrency ecosystem?
Yeah, no, thanks, Deepak. That's again a great question, and we to be very clear, to be able to very clearly answer the question, we should wait for some more things that are in progress in the government, like the whole crypto regulation bill and so on. But given what things that we have so far, I think this could be a challenge. The interoperability, between the other CBDCs and cryptocurrency being part of that, is going to be, it's going to have its own pros and cons. The pros being that you're just being open, you're just being very flexible. That you're not the more the merrier. So you're just able to accommodate a wide range of currencies. Of course, the con you also mentioned that like the governments across the world, we are wary of the risks involved in cryptocurrency, and it's not very clear. And also there is this dual view of cryptocurrency, right? One is viewing of thinking of cryptocurrency as a currency, and second thing is thinking of it as an asset. So that is what in the budget we have seen. The Honorable Finance Minister mentioned this tax on cryptocurrency, digital assets, and cryptocurrency is it can be considered as part of digital assets. So I think that if you take that into consideration here, I think it is, even though it may not be directly possible, this interoperability with cryptocurrencies may not be directly possible, but given what we know so far with all this the taxation on digital assets and so on, it is not impossible. So you can get a cryptocurrency, then probably sell it off to somebody else, pay the taxes for the gains you made, and then bring it up into digital rupee. So I think that is still going to be possible, even in the worst case, even if you don't even if you don't even if you don't consider cryptocurrency as a currency, we still have this asset route, which might work. So I think probably I'm not sure if I answered your question, but probably just elaborated your question. But that's all I can say, because I agree with you that it could be a challenge, and relatively slower pace of transactions because of this. But we cannot help it until we have um, greater trust in cryptocurrencies. And of course, the middle path is probably getting into some of the uh, solutions like stable coins, or asset-backed cryptocurrencies and so on, which are which address one of the main issues we as policymakers think, which is the volatility. So volatility aspect at least can be dealt with. So I hope I somewhat answered your question. Thank you.
No, you have actually totally answered my question. And it also gives a lot of insight to people that even if we don't directly interconnect these cryptocurrencies with the CBDCs, but there is always a way and mean where, like, arbitrage can still be used. So that was very interesting aspect, and I've never thought from that angle, that sell crypto, buy digital Indian rupee or yuan, and still will be able to achieve what you intend to achieve. So, Bati, let's move a little bit on towards the cross-border trade, because you explained in your speech that very well. Yes, we all have seen that, whether it is a small marginal businesses or the young entrepreneurs who want to do international trade, one of the limiting factor is that them to get into this maze of international transaction, the lines of credit, discounting that, all these negotiable instruments which are cross-border, they are having so much of paper, from BRCs to, like, bill of lading, all those confusion, and that is acting as a deterrent to someone who just want to export Alfonso mangoes to UAE. In your view, how do you see that? Because I also saw a very beautiful document about digital banking by Niti Aayog. And even as you rightly mentioned, our Reserve Bank of India has also been forefront of innovation in digitization of the paperwork. At the same time, we are having other players as well. Like, it cannot be just with the financial sector to take care of it, but the customs, the lot of other regulators, whether it is about, like, import or export of food products or any other products for that matter. How do you see blockchain, or do you see those cases emerging out where blockchain has been able to enhance the possibility of trade between other nations and India?
Great question, Deepak. Thanks a lot. I've been involved in the past in this sector closely with some startups and some policy institutions globally, particularly in the US and EU. What I realized from that discussion and experience was that yes, the players that you mentioned, they are crucial, like customs authorities and so on. But to my surprise, what I found was it's for this particular purpose, being the transparency in the food sector, as a particular example, the challenge comes from the players themselves, the manufacturers themselves, particularly in countries like US and so on. So they, let's say, for example, the farmer is very confident in what he or she is producing, and they're willing to be very transparent and share. But then they don't know what's happening in the logistics during the transportation, and so they're reluctant. They say, okay, I may produce the best quality food, but things may get messed up during the transportation. And then the transportation guys say, we are not experts in this, so things may happen, so we cannot be held responsible, so we don't want to be transparent. So what I found was that it's very difficult to bring all the players together, and that is not I mean that is not necessarily the thing that the government should do. This should come from the society, from the industry itself. And that I've seen this side of the story, but I've also seen the other side of the story where big players, like you can think of Nestle and Amazon, they come up with this joint venture, which you may know, where they started, doing this blockchain-based tracking of supply chain tracking of coffee. IBM has also got into this. IBM and Maersk got into this in terms of containers. So all these things are happening, and when a company like Maersk gets into this, it's automatically going to put pressure on the customs authorities. That every single, like, whether 1 in 2 or 3 containers that you get is going to have this technology, then you will get a pressure to be compatible to that, with that. So, and also as a part of the global agreements, the WTO's agreement, like trade facilitation agreement, every country, including India, we are complying with some of these digital compatibility regulations, digital compatibility requirements, and so on. So I think I look at this as an ecosystem thing. I agree with you that it is definitely within the public institutions. Within the public institutions, there are a lot of coordination. There is a lot of coordination required, customs authorities and other players. But I also think that the private sector also has to be more deeply involved. I think it's not the traditional sense of public-private partnership, but it is more like public-private cooperation. So we all have to sit together and think about how to avoid reinventing the wheels. How do we all sit together and do this together? So I think that's. I'm not talking about the typical examples of public-private partnership like roads, airports, and so on. But it's more like more even deeper than that. More philosophically, we have to agree on where do we need this, where we do not need this, and how are we, what is agreeable to most players, and so on. It's a major undertaking, and I think more than the public sector, the private sector can play an important role. And once they aggregate, they come up with all these ideas, frameworks, and so on, then the public sector is very open to hearing the views, and from there we can take it forward. So, but the public sector needs to be informed. Like you rightly pointed out, we are thinking, this my colleagues and team members, they did this digital banking report in Niti Aayog, and RBI has this. So we are putting in a lot of thought, but I think greater interaction between industry and government may solve a lot of very thoughtful and reasonable worries that you raised.
Perfect. Again, very well articulated, but we really appreciate your answer. And as you rightly mentioned that, like, it cannot be just solved by one person. And that is what the whole idea or at the heart of blockchain is: create a network or ecosystem or a platform where multiple stakeholders can participate for everybody's win-win situation. Now, this brings me to my last question, which again comes from what you just shared with us. Yes, definitely Microsoft and Bayer, they are working together, or Amazon is working with Nestle. And this is what makes everybody a little bit alarmed, that are we seeing blockchain getting cannibalized by the large player? And again, which will limit or restrict the space for the startups, and India being just on verge of becoming startup capital for the fintech sector globally. Is that a little bit alarming that the large companies still look at other large tech companies for even doing the pilots?
No, great question, Deepak. Again, I'm quite. This is a very this is an issue that I'm quite interested in, and I've looked at it from the various aspects, particularly in blockchain, because this whole discussion about private and public blockchain, the whole debate about that's all centered on this very aspect that you mentioned. I know people like Hydrogen Platform and so on. I met with the founder. So people like him, they say that, which I tend to agree to some extent, because I'm not an expert to agree or disagree, but to some extent, it made sense to me that blockchain by definition has to be public, because it's all about transparency. It's all about open network. It's not private as in permission or something. So it makes sense to me that public blockchain is what it was intended to be, and private blockchain, in some ways or in some situations, it boils down to database. Like you can have a large database, and that is as good as private blockchain because somebody has control over that. And that itself is an example of this, what you call as cannibalization, because a lot of mainstream large companies, they got into private blockchain, and there's also a broad debate happening in the industry that these public blockchain people, they say that this is the most secure one can think of, and this is the most transparent and so on. Whereas the private blockchain people say, no, if you keep it so open, it's not secure. So let's have some control, and this is more practical and relevant for large corporations and so on. So I'm not getting into the whole debate. I don't have any strong views there, but broadly, that kind of answers your one part of your question, which is this large players coming and bulldozing small players and so on. So I think that concern is there, and that is something we all have to think about and consider. But I also think from the other side, the point of view, in fact, my first reaction when I saw Nestle doing this thing with Amazon or IBM with the Maersk, I was personally very happy to hear that, despite collaborating with many startups. The reason was that I was able to really understand the challenges the startups are facing to make this mainstream. As I told you, I gave you those examples on how they struggle with all these different supply chain players. But the moment this happened, when I talked to all these startups, actually they were also quite happy because, okay, now this is mainstream. Amazon is doing it, Nestle is doing it, IBM, Maersk, they are doing it. So now people cannot say that, oh, this is a small startup that is coming and asking me, I don't want to collaborate with them. Now they say, okay, this startup can become the next Amazon or next whatever, right? So I think this is what I think philosophically about all all kinds of technologies where you have this tension between larger and smaller players. Again, if you think of space like AI, ML, and so on, there also you can say that Google has totally taken over that. But you can also say that Google has actually democratized that. Google has developed some of these systems where we don't have to reinvent the wheel. Google has made a lot of them, a lot of the AI softwares, ML softwares publicly available, which we can take and further modify. Small startups don't have to reinvent all those things. So I think there are merits to both sides of the arguments, and I think it's. But in this particular case, in blockchain, I feel like we need more efforts by the large players, which can lead to some kind of snowballing effect on the smaller players. So the spillover effect from the larger players to smaller players may be quite significant, because practically speaking, I'm sure you have seen this, and many of our colleagues in the startup industry, we are they have been facing a lot of challenges in convincing the market that this is coming, this is there, this is mainstream, and so on. But the moment you see a few giants coming in, you get more confidence, and the market gets more confidence, the investors get more confidence, the ecosystem participants get more confidence. And I think that is why I think it is important to have the big players. And we as policymakers, we have to keep an eye on the competition thing. That's why we have the CCI in India, Competition Commission of India, players like that, and we have to keep an eye on that. And yeah, so I think this is also a debate between scale and monopoly or oligopoly. We want large scale to be successful, to bring things to mainstream, and too large a scale leads to monopoly and domination. So we need a balance between the two. I think this is a very classic example of that.
Fair, Badri, thanks a lot. It was really insightful discussion with you. While from webinar, we ended up doing a podcast chat, but it was very interesting for me. I learned a lot. I'm pretty sure definitely our audience would have also learned a lot. And thanks again, Badri, staying back up so late in night from US. It is always a pleasure to talk to you. And thanks again. Look forward to have more interactions with you in future, and wish you all the best. Thank you.
Thank you again. And again, sorry for my video issue. Thank you.
No, not at all. Not a problem at all. So that was pretty interesting. So now I would like to get into the panel discussion mode, and where we are having some awesome speakers who would be sharing their journey with us. And first, I would request organizer to unmute and allow sharing of video by Christopher. Christopher is president and founder of Eve Exchange. Eve is a subscription-based crypto exchange and a global e-commerce solution for digital payments. Thanks a lot, Christopher, for being here. Really appreciate.
Yeah, well, very nice to be here. Thanks for having me. Let's see if I can get a video working.
Yeah, sure.
So we have more than a podcast. Let's see.
Totally appreciate. We also have with us David. David Gorey is CEO at Banking Reports, based out of London. He's a faculty member of the Retail Banking Academy, again from London, founding member of the World Fintech Association, Seoul, judge of the European Fintech Awards, Amsterdam, regular guest author of Finance Magnates from Tel Aviv, Israel. So thanks a lot, David, for your participation. Really appreciate.
Thank you. Great to be here. And so far, the content is amazing. I have already listened to a lot of important things.
Thanks a lot for the kind words. I'm not very sure if Anna, she has joined. Anna, she's CEO of Coins Telegram. She's a public speaker and crypto VC fund, crypto media group, and PR consulting agency head. Anna holds a degree of Masters of International Law. She is an expert in public relations and business development. She has been featured on CNBC Arabia TV, Forbes Middle East, NASDAQ, Finance Yahoo, Gulf News, to name a few. She is also the co-producer of a documentary film, Encrypted, on the new era of digital economy, featuring El Salvador and UAE government officials, founder of Binance, the biggest cryptocurrency exchange in the world, founder of Polygon, and many other industry leaders.
Hello, great to be here.
Hey, Anna, good to see you after a long time.
Yeah, good to see you too.
So we already have our panel ready, and thank Christopher for converting the podcast to now a full-fledged webinar. Thanks a lot for that. So my first question would be to you, Anna. Would you like to talk a little bit about the work you are doing? And while I know about it, and I've been following you for a long time, and extremely interesting work you have been doing, would love to hear from you.
Yeah, so I'm CEO of Coins Telegram, and we have a group of companies. We started initially in 2017 as investment community, and currently we have investment arm and invest in different crypto projects. And as well, we have a news media website, coinstelegram.com, where we cover daily crypto blockchain news. Additionally, we quite actively developing now our YouTube channel called White Crypto, and we make a lot of interviews, reviews of the projects there. And additionally, we have PR agency, so we support different projects with publications in media like Top Financial, Business, Crypto Media, Forbes, Entrepreneur, Finance, Yahoo, Cointelegraph, and so on. As well, we work a lot with influencers, which is quite important for crypto projects. We work with YouTube, Twitter influencers, do different social media campaigns in Twitter, Telegram, Reddit, Discord, etc. Additionally, I'm partnered at a company called KYC Pay, and we have a marketplace of fintech solutions. And we partner with quite a lot of banks and payment gateways, legal providers, so help businesses and individuals with opening of bank accounts, or if any merchants or other companies would like to accept crypto, we help with setting up payment processes, or as well with setting up their businesses. Thank you.
Awesome, Anna. I know it is difficult for a person like you to give introduction in just 3 to 4 minutes, but still very well tried. Next, we'll go to Christopher. So Christopher, I would like to know for our audience a little bit about what EVA Exchange is doing? Because it looks very interesting when we say that crypto plus e-commerce, right? That's, I believe, is the holy grail, where you can do everything seamlessly. Would like to hear from you the great work you have been doing.
Yeah, sure. So Eve, we like to call it the next generation exchange because we allow people to do what really crypto was meant to facilitate from the beginning, which is global trade and decentralized trade. So at the moment, under the current exchange model, you pretty much are limited to just buying and selling cryptocurrencies and whatever derivative options they might have on the platform. With Eve, you can do all that. Plus, you can go and spend your earnings on things that you might want to own. So, the whole purpose of a currency is really to be able to acquire things that you either need or want, or spend it on services that you need or want. So that's what we really facilitate. That's kind of our core goal, one of our core goals. So in the end, what it allows people to do is set up a business. So we work with large companies who want to offer their products on our platform, but then we also work with, small retail startups, anyone really who wants to buy and sell a product on the platform. So, if a young entrepreneur wanted to tap into the world of crypto, he could simply, start selling some sort of product on our platform and start earning crypto right away. And then he can go invest, and then he could start to go and buy things that he needs or want. So in the end, it creates like a whole ecosystem. It creates a loop of people getting into crypto by selling things and then trading, and then people being able to exit crypto as well to get things they want.
Awesome. I love this idea of earning the crypto and spending the crypto on something which we love. And we all love shopping, isn't it? In fact,
yeah, exactly. And the other thing that's quite cool is we make it very, very easy for you to make money, or at least we try to make it as easy as possible to make money trading, because we offer flat fee trading. So we're one of I think we're probably the only crypto exchange that's offering a subscription-based trading model. So you pay one fee per month and you can do unlimited volume on there. So it should make it relatively easy for people to develop interesting, bot trading strategies or algorithmic trading ideas that could help them make more money than they would otherwise, because it would just get absorbed by fees if it was on something like Kraken or Coinbase.
Fair enough. So that brings us to our third speaker. So while we have heard Anna and Christopher both actually riding the crypto wave, there is someone in David who would try to, I'll say that, balance it out by talking a little bit about the challenges of the crypto ecosystem itself. So David, floor is yours for introducing yourself and the work you are doing.
Right. Can you hear me?
Loud and clear.
Perfect. Very good news. So I really like the perspective of Anna and Christopher, but I have a more difficult role here. My role is to talk about my view on this crypto maze, or I shall call it perhaps crypto craze, which is a much more critical view. Obviously, I want to be on the side of Christopher and Anna, because it's always much better to talk about innovation as something beautiful and highly valuable. That's what I want to do. But I also have to mention risks. And risks, I am sure that Anna and Christopher admit it, do exist. I mean, nothing ventured, nothing gained. Risk and return are more or less statistically tied in modern market theory and beyond. So I am sure that they both admit that there are risks. And here comes my next point, where we can have a meaningful debate, perhaps, that risks are underestimated in this arena, and the risks are underestimated by magnitudes, or at least minimum 1 magnitude, a multiplicator of 10. Lack of compliance, lack of nominal price stability, lack of sovereign control over monetary supply, potential for deflationary cycles, environmental considerations, real cost of transactions, exit difficulties, fraud, lack of interest rate content, and lack of intrinsic value intertwined. These two final ones have to be intertwined to be lethal towards an asset class. So when I list these shortcomings, I feel bad. I feel bad because in the same arena, there is amazing innovation, blockchain, central bank digital currencies, asset tokenization when the assets are meaningful in the background, smart contracts. So the same tool, a simple knife, can be used to cut the meat, or can be used to, so to speak, symbolically, commit crime. And here we are to regulate it, to codify the fact that these aspects are very much helping us to cut the meat, to peel the onion. However, other aspects, such as initial coin offerings, as they are practically now, such as crypto-related Ponzi schemes. Not all crypto-related activities are Ponzi schemes, but some are. Those have to be regulated. Anyway, that's what I wanted to say.
Very passionate. I'm having a good time, like, having 1:2 to start with. I'll decide which side I'll move as we move forward and discuss. So Anna, like, you have been in this business for a long time, and taking a little bit clue from David, like, there is always a challenge in, like, which crypto asset to invest in. And we are seeing a lot of noise around any new things. Somebody just tweets about dog, and then you're having people investing in dog coins, right? So that makes a person like me, right, worried that if I'm putting money in crypto asset, am I sticking out my neck too far? We would like to know from you, in your view, what would be the best practices for someone who want to invest in crypto? Anna, you're on mute. If you can unmute yourself. I think, Tushar, you'll have to do the unmute and she'll get a message.
I think she just, I think, put, like, logged out maybe. Let her join back meanwhile.
No, she's there live. You have to unmute her.
1 second.
I can see her on the screen.
So everyone is unmuted now.
Yeah.
Anna,
Anna, you'll have
unmute.
to unmute yourself.
Yes, she is there.
I think she cannot hear us, it seems. Or she's just texting. So I'll go to Christopher, like, little bit evolved question, like on the same topic.
Sorry, it now works because I was I logged in from my laptop and I was restricted from unmuting myself.
Okay, so yeah, Anna, I hope you heard the question, right? How do we see the challenge of a person like me, right, who see a lot of things happening in cryptocurrency, and before investing, how should I be thinking? What steps I should be taking to ensure I'm doing it safely?
It actually depends on the level of person, how much the person has understanding in this industry, whether it's just like alternative of investment into crypto assets as in comparison to other assets. So, for example, for new buy, the safest thing will be just to invest in already established top coins like Bitcoin and Ethereum. So it's like the safest bet for the long term. Nothing will happen with these coins. If we talk about a lot of other investments, investing into crypto is alternative for me to investment into stocks. And well, of course, everybody invests because we expect some bigger returns from these or those coins. But we should understand that sometimes even a company may be good, so they may do some cool things, but it is not always mirrored and reflected on the price of the coin. But generally, you can make just standard due diligence, check what's the background of the team, but the company goes according to its roadmap, what products, services they offer, what partners they have, what investors they got. So if they have some top funds among the investors, like for example, A16Z, Polychain Capital, Sequoia Capital, Mechanism, Verify, and so on, a lot of others, you can understand that those funds vetted that this project is real and like it's their bets on the team. So it should be safe to invest by. But another thing you should understand is that when you invest into some altcoins, they usually just follow the market trend. So usually when we see the bearish trend and drop of Bitcoin and Ethereum, probably other altcoins will go down too. And another thing, if you want to be on the safe side while investing into altcoins, you shouldn't invest more than you can lose. And as well, it's always better to go into this or that coin early. So you buy it at a cheaper price and just hold for the long term, and periodically you fix half of the profits, take your initial investment.
Excellent. And any views on, like, the new trend of investing in so many of NFT assets? Do you have some recommendation for there as well?
So NFT space is actually like very speculative as for me. And it's some kind of gambling. Myself, I don't invest into any NFTs, but for example, some of my managers invest into NFTs, and it might be as well a profitable game. For example, as well, I mentioned that you need to get in some stuff early. So for example, you can find some interesting projects. A lot of NFT stuff is mostly promoted on Discord and Twitter. So you can check what people write in this Discord chats, make your evaluation whether the project may be good or not. And then with NFTs, you can get into the whitelists. Then you mint your NFT, and like it's like a lottery. So the next price of your NFT depends on what features of NFT you get, what's the number of your NFT, and etc. But basically, you can as well earn not bad, like 5 times more on average. So you just, for example, mint NFT for less than 1 Ethereum, like usually it's 0.1, 0.3 Ethereum, and you can sell it just like in a few days at higher price. So it's as well not that bad scheme.
Fair enough. So I'll move to Christopher next. So Christopher, like, there is saying when you are doing stock trading, right, the brokers always make money. Right. So I believe same is the case with exchanges. Now, how do you see this challenge of, like, for investor investing in what sort of assets? So what sort of due diligence do you see that exchange need to take so that they are ensuring that their end users are protected?
Okay, so you mean in regards to listing new tokens? No.
Exactly.
So yeah, that's a thing, so you have right now decentralized exchanges, which anyone can mint and list a token, right? So I can make a token in 10 minutes. listed on an exchange, and it could just be like a dodgy coin or an outright scam. And there's nothing that could stop me or anyone else from doing that. So I think it's important to look at the different types of exchanges. So on a decentralized exchange, you have that activity happening all day, all the time. Okay. How do you distinguish if a project are good or not is coming down to your own due diligence. As a centralized exchange, we're regulated, so we have certain requirements that we need to look at in order to make sure that the project is actually a genuine project. So first thing we would look at is to make sure it's not a security. And then the way we do that is we ask for a legal opinion. So we ask for a legal opinion from the jurisdiction in which the project is established, which basically sets forth that the reasons why the project or the token is not a security. So that would be step one. And then if a project went to the length to get a legal statement like that and incorporate properly, that already is a big, let's say, barrier to entry. So that automatically gives us a bit of confidence. That doesn't mean that it's a good project. That doesn't mean that it's not a potential scam or something else. The next thing we would look at is just the reputation and the type of marketing that the project is doing. That again is not a guarantee that it's going to be a good project or that it's not going to result in losses for the people trading it. Most tokens tend to have like the initial exchange listing pump and then the subsequent sell-off. So people take profit. There's people who get in at cheaper prices, and these are all things that we also like to know. We like to know, hey, what did you sell these tokens at, and what price are you going to list it at? Because if they, bought the tokens for $1 and they're looking to list them for $2, there's going to be a lot of people selling when the token lists. So we try to make sure that the project has taken all the precautions necessary to avoid the price collapsing. In addition to that, of course, you look at the team behind it to make sure that, that they themselves pass all the KYC and AML checks. That you're not dealing with anyone who's having like a criminal past or is on any sort of wanted type of list for money laundering or things like that. So that's what we look at when listing a project. And then of course the interest around the project. So if there is enough interest around it, also that can be a good sign. That of course can be a good sign, and then in reality not be a good thing. I mean, you've seen lots of projects with a lot of so-called hype and interest that have resulted in being nothing more than total rug pulls or scams. So it is a very delicate balance between giving our customers the projects that they want to see on the platform and making sure that they're actually legit and legal, legally regulated and that we're legally allowed to actually offer them.
That's great. I believe that at least medium level of due diligence would help, and that is what is also we have heard two specialists here talking about the personal due diligence. So all the audience, even my view on this would be definitely I'll go to David about asking on that, but I'll limit a little bit David because I know that his view would be more deep on this. I strongly believe that the personal due diligence, just like even if you want to pick a stock, what you do is that you go through the balance sheets, you go through the previous track record of the founders or the promoters. You go and see the track record of what the company has been doing, and when they're quoting something, are they achieving that? While majority of the corporations are regulated, so it's easy to get that data. I know for blockchain, getting that data would be difficult, but in case you have lack of access of right data, please avoid that crypto. Right? It's not worth putting a lot of money. I know it is very exciting to see the gains, but at the same time, it is your hard-earned money. Be careful where you invest. So if you don't see too much of data available, it's better to skip it and not wait for somebody to tweet it to make it $1 billion opportunity. I go to David here. So David, your views on how do we see the challenge of identifying the right crypto, and according to you, what are the limiting factors before you should put your dollar or your rupee or your yuan in any crypto?
Right. Very good question. So basically, decentralized cryptocurrencies as they are, in my opinion, going to go down, and it will have dual reasons. Not just down, not just the price down, they will be wiped out and they will reincarnate.
David, I'm sorry. Can you again, for my clarity, repeat this complete statement of yours, because what you are making is actually a breaking news. Can you just repeat it?
So
Can we have a debate about that later?
The entire decentralized crypto ecosystem will be sooner or later wiped out, and it will have dual engine behind being wiped out. One will be economic, so to speak, monetary engine, and I can derive it from monetary history. Of course, Christopher and Anna would argue otherwise, and I respect that. And, history will prove them right or me right. And the second reason is regulatory. A major crypto regulation is in the pipeline, informally, not formally, but informally. It will be a Basel level regulation, and it has to come. There is only one complication, mustard after meat. Major financial regulations follow crises, not prevent, but follow. It's easier for legislators, regulators, politicians, and even for risk experts to react to already realized set of risks. So there is approximately a 5 trillion risk issue in front of us, $5 trillion US. Of course, it's very volatile, but if I add up all the assets which will be wiped out, it amounts to approximately $5 trillion US. However, the creativity, the innovation, the type of business Christoph and Anna is doing, this will remain with us. This will be channeled into very well internationally regulated regulatory categories. And in fact, for talented, hardworking visionaries, this will create additional competitive advantages. However, it will wipe out the majority of the upfront, not so compliant, not so legal activities. So mustard after meat, but regulation will come.
Great. So I'm still trying to digest what I heard. And you rightly mentioned, there is always two views on any topic, right? And there is always head and tail in a coin, and that's also in a crypto coin. So I appreciate your views for sure, David. I'll move to Anna again. Anna, let's move a little bit away from crypto. It is heating up, and how do you see, because of your engagement with whether it is a government of El Salvador or UAE, how do you see the governments adopting cryptocurrency as one of the viable payment mechanism in their own economies? So any views on that?
So as a payment mechanism in the economy, we see now the only one country which adopted Bitcoin as a legal tender, El Salvador. It adopted Bitcoin in September, and it's quite great for the economy as it is quite reliant on remittances. But as for me, I'm not that much sure that it's a viable solution, because Bitcoin itself is a very volatile currency. And it's not that viable to pay for some everyday transactions, for small transactions. with Bitcoin, and especially to lower the fees, you need the implementation of Lightning Network. So as for me, stable coins is a great solution in this direction. But some other countries, especially in Latin America, may adopt Bitcoin as a legal tender too, because they're as well quite reliant on remittances. So, for example, Tonga, Bolivia, Panama, Paraguay, Turkey, may as well adopt Bitcoin as a legal tender. But we see already a lot of other countries referring to Bitcoin or to generally to cryptocurrency because they have extremely weak national currencies, like we have been seen in Venezuela for a long time, that they have just like hyperinflation, and there it's just not viable and impossible to hold local currencies because you just lose so much money. So a lot Bitcoin is quite popular there. Or for example, when countries have some revolutionaries, some unstable socio-economic situations, like for example Lebanon or Turkey, cryptocurrencies is well quite popular there. And at the same time, we see that a lot of countries have been working on the development of central bank digital currencies. They at the same time not that much decentralized as crypto itself, but as well it's a good alternative to the traditional fiat money because it's on blockchain. So it's central bank digital currencies are created for what for the purposes of blockchain, to remove intermediaries, to reduce the fees and etc. But at the same time, we see two competing systems. One is from the cryptocurrency side, which basically like private money. So nobody can control your assets, and another is that governments don't want to allow private money to flow, so they want to control the flow of the currency and create their own central bank digital currencies.
That's excellent, very well articulated. And one more, I'll say that subsequent question based on this, what you said. The most of the country I was able to hear, right? They are the countries either, as you rightly mentioned, they are having challenges in social, economical, political levels, or they are also those countries which are quote unquote are known as tax havens. So do you see that also playing some role where those countries who see taxation related activities or taxation related tourism as one way of earning their own national revenues would be more interested in doing that? And again, same way which this past decades we have been trying with the anti-money laundering acts to clean up these nations, we'll end up doing same with crypto also going forward. So do you see that again restructuring of global economy happening for those who allow crypto and those who don't? Do you see that happening going forward?
So I don't think that those countries will adopt Bitcoin or any other cryptocurrency as a legal tender. They just generally have cryptocurrency legalized on the legislative level. So, for example, what we see in UAE, you can, before there were as well very, and still now very popular different cash deals. You can easily buy real estate or car or anything else for cash, and nobody will ask you any questions. The same on the official government level in the UAE. MR is the real estate development company which officially can accept Bitcoin for purchases of real estate, and at the same time there are many real estate brokers in the UAE which as well accept crypto as a mean of payment, but they use after some OTC services. But it's quite common there, and as well generally we see both from a lot of government sites and private merchant sites. They're crypto friendly. They allow acceptance of crypto, like for example Japan probably was the first country which legalized crypto. As well, we see that in Singapore it is as well legalized. UAE tries to become the next crypto capital. and makes a lot of crypto-friendly regulations. Ukraine as well almost adopted and legalized crypto. Like last year, there were so many news about legalization of crypto in Ukraine, but in reality, it's still in the gray zone because the president returned the bill of the law back to parliament for the elaboration. But at the same time, we see that Ukraine is #1 in terms of the percentage of population which holds crypto. So that's quite common. And as well, worldwide, there are more than 18,000 merchants which accept crypto, and this number will be growing. And we see that a lot of big corporations as well accept crypto. Tesla accepts crypto, Microsoft, Starbucks, Expedia, a lot of smaller players. Google just announced the formation of blockchain unit to explore both the implementation of blockchain as technology and crypto payments. So as we see, this industry is quite developing.
Super awesome, Anna. Point taken. And definitely Ukraine is having a country with percentage-wise, nearly everyone is having crypto. And we see a lot of even global leaders like you coming out of Ukraine. So hats off to all Ukrainians. And I believe they'll continue doing the great work. In fact, Ukraine is also known for something which is very close to my heart, for growing grains, right? They feed a lot of countries. They feed a lot of countries. And when you have, I'll say that, convergence of agroeconomy and crypto economy, Ukraine would be surely a leader, just like India. I go to Christopher, you are someone who is already using crypto for doing the payments through your e-commerce play in your EVA exchange. How do you see it as a challenge to scale up? Because not as just we had a discussion that not all the countries would be making crypto as a legal tender, right? So how do you see that challenging your own scalability, or are you happy with only those countries which allow it? Or I'll say that third-party companies registered in those havens where crypto is a legal currency or legal tender?
So I think it's important to distinguish between legal currency and liquid asset. So I think that's the first thing to really look at now. So if it's a legal currency, that means that I can go walk into any store, place, shop, and I can just pay with Bitcoin, like in El Salvador. Anyone can accept it. Any merchant can accept it. Banks have to deal with it in the country, and so on and so forth. But if it's a liquid asset, that just means I could sell it for the national currency that I wish to spend very easily. So that is kind of the case right now with pretty much globally. So if I have crypto and I wish to sell it for US dollars or euros or pounds or any kind of major fiat currency, I can, as long as I'm on the right exchange. And even if I'm not on the right exchange, there's still a dark economy where you can do these transactions. So I don't really see any limitation in the use of my platform, for example, for processing crypto payments. The only limitation would be really regulation at a local level. So whether or not a prospective client or current client is allowed to use my platform for that purpose is really the question. And of course, the regulations are always changing and always being updated. And in Europe, in the next few years, we're going to have probably Europe-wide regulation. So things will change, and that will be the limiting factor. It won't really be whether or not it's recognized as legal tender. Like I think what El Salvador is doing is interesting, and it's innovative, and it's got people talking about El Salvador as like a innovative place. That's good, but do I think that having Bitcoin as your legal tender is probably a good decision from a administrative perspective of a country? Probably not. I agree with Anna on it. It's too volatile. It's why would you make a volatile asset your base currency in your country? It just doesn't make any sense. So I don't see crypto really getting much traction. Let's call it the non-government sponsored cryptos. So because there will be government sponsored cryptos, okay, and those will be like the digital dollar, things like that. Those will be for sure adopted by countries as legal tender. But the current crypto, like Bitcoin, Ethereum, the thousands of other altcoins, those are never going to be a good idea to use as legal tender. And I wouldn't expect many countries, except for very small nations, to consider it. Yeah, I mean, does that answer your question?
Yeah, you have answered question like that, but that's open up one more thought from my side. See, the whole beauty of cryptocurrencies, right? The reason Bitcoin became so popular, right? Definitely, like an initial period of its growth, it was not because of like, it can be speculated upon, right? That its valuation will go much and then people will make money out of that. The beauty was that because it is peer-to-peer, it reduces the cost of transaction, cross-border transaction becomes easy, right? It will become poor man's dollar, right? Who cannot do the SWIFT transaction when you are like sending money out of to the other country. Now that beauty gets eroded some way when we say that like, it cannot be the payment mechanism, but it can only be the liquid asset. Any views on that? That will it take away the sheen of the Bitcoin when it was targeted toward the base of the pyramid, saying that this is the currency for poor?
Okay, so Bitcoin in itself is actually a really bad. I mean, so just using the Bitcoin blockchain, for example, is it's not a good means of transmitting value. The Bitcoin network is very slow in itself. Okay, there are solutions to speed it up, and that's what everyone uses. But on itself, just Bitcoin, throwing it out there, on its own, it's not the greatest solution for payments. I mean, for a number of reasons. One, it's just as good as cash in the sense of I'm going to send you a bag of cash and I'm going to hope that you send me a car, right? Imagine we did that. So that is actually how it is, right? So I send you $50,000 worth of Bitcoin, and now I'm expecting for you to send me a car, and I'm going to wait a while, because that car is never going to show up. So as a global trade situation, not to say that you wouldn't send it, I'm sure you would, but as a means of a global trade tool, right? You need to have trust that the person's going to ultimately deliver the product that you're looking for. So this is why there's all these applications and all these add-on solutions to help facilitate that. And that actually that's taking away what Bitcoin was meant to do. Bitcoin was supposed to facilitate trustless peer-to-peer trade. The problem is that only really works when you're like facing the person head on, Why? Because there's this, I mean, like at a global scale, so it's a trusted party that for sure they're going to send you what you bought, or it has to be face-to-face. So in that sense, Bitcoin's not the greatest tool for global trade. Now, on another level, like if we're going real back in time now, Bitcoin's first real transactional scale was on the Silk Road. So that was its first, like, let's say, use case moment, because prior to that, it was very, very little heavy transactional use. Once the Silk Road launched, it was very heavy transactional use, and that's actually what put Bitcoin on the map. As sad as that is, Bitcoin was put on the map more or less from a global drug trading network. So it worked in that instance because they had a trust score of all the sellers on the Silk Road. So if you were selling on the Silk Road, you had a trust score, and people would only buy from you if you had a good trust score. So then, I mean, even at the most basic level, when Bitcoin was just starting, you still had a third party in between the person who was holding the Bitcoin and the person who had the thing that they were looking to buy with it. So I don't expect there to really be any cryptocurrencies that don't involve some sort of protocol in between to facilitate the transmission of goods and the facilitation of trust.
Cool. So as you rightly mentioned, like, even if they are drug dealers, they still all need trust. So yep. So I believe we'll have more Silk Roads, and Silk Roads, like, which are for legitimate purpose, not for something which is not helping.
It really never went away, is the truth. So is like, the FBI.
It's always there.
Down, and then it came up again.
Yeah. It's like Hydra. You cut one head, you get 10 more.
Yeah. I mean, in a sense, I'll just close up this.
Yeah,
In a
sure.
sense, what Eve is trying to do, what my exchange is trying to do is be that legal Silk Road, where we only allow legal products to be bought and sold on there. We want to encourage, small guys. We want to encourage the guy who makes, necklaces or something, and he would be selling them on the beach. But instead of selling them on the beach, he's now selling it to a global audience. And then he can earn some crypto, he could trade some crypto, he can make more money and then buy something else. That's what we're trying to encourage. We're not trying to encourage like any sort of illegal purpose or anything like that. And that's actually, I mean, like that's just going into delving into David's zone here. Like a lot of people think, and I think it all leads back to the original Silk Road, that crypto has like this deep roots in the criminal underworld, and it doesn't actually, so it's actually very hard to use crypto for criminal purposes. As you can see, there was, the guy who robbed the exchange and $3.5 billion worth of crypto, he got caught, It's very easy to track these guys down because every single transaction is logged on a blockchain. At some point somewhere, they're going to look to sell those coins to be able to spend it on something, and they're going to have to interact with a regulated entity to do that. So at some point, those coins will exit the via an exchange, and that's when they're gonna find these guys, and that's what happened.
Totally agree. Like, the trail is there, and the trail can definitely be something which criminals don't like. So I go to David. David, your views on how do you see, the challenge of making crypto as a payment mechanism, or do you just totally want to throw that in the dustbin?
No. Imagine we are in 2050. So now we are in 2050, and we are looking back to the good old 2020s, okay? Like this post-COVID world of growth and happiness, okay? And looking back to the 2020s from the 2050s, when we are paying with central bank digital currencies, when the healthcare and agriculture and digital identity of India is running on a blockchain, things like this. We are in 2050, okay? So, and we are looking back to the past. What we see is this all had to happen like this, because in monetary history, innovations typically, overwhelmingly, originate from the private sphere. Innovations originate from great, creative, unregulated, free minds and people working together in a garage, and people speculating, taking extensive risk, thinking creative. So the innovations in monetary history come in a decentralized way, so to speak, okay? In medieval Europe and after and before. However, monetary innovations sooner or later end up being dominated by states, sovereigns, kings, and central banks, independent central banks, and modern states. And this is exactly what's going to happen. So Bitcoin, Ethereum, Dogecoin, stable coins, Libra as a failed but still creative project by Facebook, all this universe is necessary in terms of monetary history. And we will end up in 2050, I am just making this date up because it sounds good, we will end up in 2050 with a very good global monetary infrastructure, because we went through this decentralized, colorful, volatile phase of less regulated reality. So this is necessary. And I agree with Christoph. It's easy to get caught if someone is doing something illegal. And I think we have to orchestrate this. Innovative is not illegal. The two things are different, and innovation is very much necessary for this new monetary system to evolve. And those countries which are currently experimenting with adopting crypto formally or informally as a fiat, as a legal tender, yes, they may be currently less successful countries potentially. However, they are experimenting with something that China, India, European Union, and the Federal Reserve in the USA will soon experiment with, but they will experiment with it in the form of central bank digital currency. Anyway, things will work out to be very, very good and positive, but this will be a bumpy road.
Excellent, David. I was expecting, I was not expecting, in fact, this. I thought, like, you'll be saying that just stop the payments using crypto, but you articulated it very well. And it was very interesting, like, your point of view. And with that, we come to the end of this very interesting panel discussion. And it was a pleasure to host you, Christopher, Anna, and David. Like, I got a lot of insights. I'm going out of this discussion with, I'll say that, more intelligence, and look forward to engage with you people more going forward. And thanks a lot for being the panelist of this excellent panel discussion. Thank you.
Sure.
Thank
You're
you.
welcome.
Great. So that brings us to our next panel discussion. And this time we'll be talking about how blockchain can be used for trade financing as well as philanthropic financing. So we are having two awesome speakers who would be part of this panel. One, we are having Arun Maharajan. He's a blockchain lead at UNICEF Innovation. He's engaged in various blockchain-based initiatives within UNICEF and the larger UN ecosystem, including the UNICEF Crypto Fund, mentoring blockchain startups within the UNICEF Innovation Fund portfolio, managing various UNICEF internal blockchain initiatives, and more. He holds a bachelor's in engineering from BITS Pilani and a master's degree from, let me pronunciate it, it's a German word, very difficult, Hochschule Esslingen. I know I've been totally wrong on that, but I tried. He has over 15 years of corporate and startup experience before joining UNICEF. We also have another speaker who will be joining Arun. That's Breiksha Kaparwan. She is Chief Marketing Officer of Alpha AI. When you are on LinkedIn, you cannot miss seeing one of her videos. She is awesome, being followed by, I think, close to few 100,000 people. So Breiksha is co-founder and CMO, as I said. She's enabling enterprises to transform into real data-driven organizations. With a vision to create access to analytics for every user, Alpha AI democratizing the analytics with Super AI. Breiksha is a serial entrepreneur and has been working in data analytics field for 10 years. With her previous startup, Realbox, that was a Microsoft BizSpark startup, B2B marketer and self-taught techie, and she has a rich, diverse experience ranging from hospitality to AI industry. So I start with Breiksha. Breiksha, though I have given some introduction about you, would definitely love to hear a little bit more about you and the work you are doing.
Thank you, Deepak. Um, First of all, I really enjoyed the last panel discussion around cryptocurrency. It was really interesting to understand how globally we are looking at this. So just to give a little bit of what we do today is that we decided one day that data analytics is a very specialized field, but data is used by everyone and almost any kind of technology you're working in, there will be some kind of data that you are trying to work around. Are not very well versed with the analytics, and hence you rely on a group of very technically savvy people, right, called data analysts, data engineers, data scientists. And hence, when I came to a startup where data was extremely important and I could not make sense of it, we realized that it needs to reach to everyone who was trying to understand how to create more value from the data. And hence we incorporated AI in our solution today, that is the AI data platform, where you can simply ask questions on data and AI will do the analysis on your behalf on billions of rows of data and give you the answer in a legible, readable format. I'm not sure if I can show you an example of how NLP makes it so easy for data to be accessed and analyzed by everyone who has a curiosity towards it. But if you give me a chance, probably I can.
Sure, Breiksha. I think, would you need a screen sharing for that?
That's possible. It's disabled if you can enable.
Yeah. It's done.
Thank you. Just share my screen. I'm not sure which screen it is now. I think there's some challenge with sharing the screen. I would have.
That's okay. You can just tell us more about it in detail, maybe, and share the link later in the chat.
Yeah, I'll do that. So what we have been working on is creating a method of how people who are on business sides of things, people who are on who are working with customers every day, they can have access to data. For them, looking at dashboards and waiting for reports is one way to achieve those things. And same goes in finance industry as well. Everyone is waiting for some kind of reports to come to them so that they can take the next step based on that. And most often what happens is that decisions are made without data being there. So you are stuck in a phase where you are trying to get the data for which you have made the decision already, and hence making sure that your hypothesis, your decisions now are correlating with the data. So this is a platform which we created using AI methodology, where it gets trained on any domain. And when you ask a question like something like who are the customers who have made UPI transactions today in last 1 hour below 10,000 rupees, it will give you an answer instantly sitting on the real-time data. Now that is something that we initially thought that a lot of large companies like Tableau, Power BI, or the analytics companies, BI tools in space, would be tackling already. But that was always focused on the technology manpower of an organization, which usually is 5%. Those are very highly technically skilled people, and rest everyone is focused towards business. So there is a choice whether you can empower these 5% people with knowledge of 95% people, or you can empower these 95% people with knowledge of 5% people using AI. And that's where AI can become a fundamental building block of the technology fabric moving on.
That's amazing. I'm sure. Yes, absolutely right. What you said, that data is critical for any decision making. So I move to our second speaker, Mr. Aaron. Please welcome to the summit, and your views on that.
Okay, thanks a lot for having me. Deepak did ask me to speak a little bit more about what I was doing, but before that, thanks for that, Breiksha. I think your passion for AI and NLP comes across very, very clearly. And in the world of blockchain as well, many pundits say that blockchain, especially as a decentralized open ledger, at least with respect to public blockchains, the data is out there. One of the previous speakers, Christopher, mentioned that a thief who stole Bitcoin ages ago was caught recently because the data is out there. So there's so much data available in these blockchain ledgers. I'm very curious to see how machine learning and AI would come in and transform all that data into fascinating insights. I'm really curious to see how that happens. Thanks for that. So to speak more about UNICEF itself and then our role in the ecosystem, not many people, of course, associate UNICEF with cutting edge technology. UNICEF is as many of you might be knowing, an agency within the United Nations. It's about 75 years old. In short, our mandate is to help children and young people around the world across a variety of topics, from health, education, maternal health, and then so on and so forth. So within that, for the last about more than about 10 years, we are having an office of innovation where we experiment across frontier technologies, and specifically blockchain technology experimentation has been going on since 2015. And there are a variety of results to show for it. I hope to share some of it and then engage in a useful discussion today. So one of the things that we do, which Deepak briefly mentioned, is called the Crypto Fund, which is we are now capable of receiving crypto from any donor around the world, holding crypto for a short period of time, and then disbursing crypto to various entities, of course, ultimately benefiting children in some way. So the Crypto Fund has been active since 2019, where we use it to fund startups around the world. So many of these startups happen to be blockchain startups, which of course me and my team would be mentoring. So I'll give you some examples since we are in the Global Fintech Summit. The last cohort was specifically oriented around DeFi and fintech. So some of the examples of startups who we have funded are there is a startup in Kenya who's working towards enabling off-ramping of crypto to fiat currency without a smartphone, using just your feature phone, for example. There is a startup in Rwanda who's creating wallets for financial inclusion of people, especially refugees there, and to enable cross-border transactions, all without a bank account, for example. There are startups who are working on educational initiatives, as well as creating investment products around crypto for customers in Latin America, and then so on and so forth. So we invest into these startups, and we encourage them to reach their goals. So this is of course our way of encouraging blockchain startups, not just blockchain, but other technology startups as well, to reach their goals and to ultimately benefit children and young people around the world.
That's excellent. So I go back to Breiksha. You have been working on making sense out of data, right? And the data aggregation, collection of the data, and in most of the organization, you'll find that data doesn't talk to each other. And unless the data talk to each other, it's very difficult to run any algorithm on top of it. And you have been also doing a lot of visualization around data so that it becomes more insightful rather than just being Excel sheets or databases. I would like to understand a little bit more, how do you see that the collection and aggregation of data, and how we can ensure that we are able to do it more seamlessly using AI or machine learning or other tools?
So how businesses used to run initially, like early, we always had this collection of data where we are keeping track of every transaction, all the supply chain that are within the companies. We used to maintain separate ledger of it. Think of it as different diaries you're keeping to maintain all the transaction of like customer data, of supply data, of your storage data, right? So now when the companies came in digital age, digital era, there was a class of companies that became data driven from the very first day. They became their cornerstone of their success was data, because they were being able to collate all that data and connect. But because a lot of institutions were already so large that their data processes were kept in different separate silos, they were dissociated. And companies like us, companies like consulting companies that work around data, their major chunk of work is actually collating that data and making sense out of that, and hence discovering what is missing in the process. Now, let's say that you are using a standardized AI template for AI data template for one of the functions in the company. Now, this AI template, because it has gone through situations with multiple companies, that it has stored the core knowledge, not the data, but the core knowledge of how a certain function, a certain business function in an industry works, will be able to predict for you that this is what you might require to come to this kind of decision, to come to this kind of number. This is what is missing in your data process, data fabric that you need to plug in. Now, that is one way you can think of how AI can actually help recognizing which are the areas where you are leaking the collection of data. Because while we are trying to see that how data can be used, how it can bring more value, there are still a lot of functions, lot of aspects where we miss collecting the right data. So first, recognizing what question we are asking and making a solution according to that, that absolutely will help with figuring out that you have the right raw material to begin with. Then again, with most companies which are right now going towards data democratization within the companies, they have these pre-built standards, pre-built templates of what they want to use, what questions they want to answer, and sort of omitting to discover what next could be there. And that's where democratizing data within the organization by including everyone who is working with you, who has the power of making decision, comes into place. And they give you the sense of what they need at their level, at leaf level, and what you're seeing as a leader, as the owner of data, which usually are technical teams. And then that there's a mismatch and a way to recognize that mismatch. So augmented analytics is one way that I talk very often in my videos about that. Data analysis can be standardized, can be modeled, can be trained for an AI to discover for most of the teams which are dealing on the business side. But the data has to be correct for it. The data has to be procured from the right places, procured in the right format, and that can actually be digitized to reduce the time it usually takes to implement a process like that.
Super cool. I totally agree with you. You need to find the right data and you need to apply right analytics, and then only data will give insight. A lot of people say that data is new oil, right? And that has been a common term. 2.5 years back, I was speaking at one of the conference, and I said that actually that is the first thing which you are doing wrong with the data by calling it an oil. Oil is something you put in your vehicle and then you just consume it. It's gone. I always say data is like soil. Depending on the seed you want to sow, you get the right sort of plants. So totally agree with you. Like augmented analytics is something which is going to make this soil rich for most of the organization. Back to you, Arun. We would like to understand, as you briefly mentioned about some of the work you are doing, philanthropic or developmental capital is very important for many countries which are going through challenges, whether it is about refugee crisis, malnutrition, fertility among the kids because of various disease, and poor sanitation. How do you see blockchain playing a role where the mobilization of the funds for the philanthropic activity reaching the ground?
That's a fantastic question. So we have seen a rising trend in the intention to donate crypto for philanthropic causes around the world. There are even reports on this. For example, recently there was a report published by a US company. Only within their scope of operations, they obtained about $69 million worth of crypto in 2021 across the year from crypto donors. Now, what is interesting to note is the ticket size was about $1,000 or more than that, and compared to the regular ticket size for donations, it's about 10x or more. So and the most interesting thing is this taps into an entirely new demographic, because the understanding is most of the crypto millionaires or the crypto or the powerful people in crypto, they happen to be millennials, Gen Z, or in general people who are younger than otherwise. So this opens up an entirely new market for receiving donations for philanthropic needs. And that is just one aspect of it. That is the incoming aspect of it. Now, when it comes to actually moving the funds to where it really matters, the blockchain technology makes it much cheaper, much faster to, of course, disperse these funds due to the nature of the technology itself. Of course, we have to be cognizant of whether crypto is banned or is illegal in whichever country that we transfer the crypto to for whichever purpose. So we do that due diligence.
That's cool. And any views on the acceptance of the crypto donation and their deployment itself? Because of late we have seen a big billionaire giving for COVID relief $1 billion. A part of it was returned back to him, and those type of things, those consortium. I know that UN has the trust, which is going for nearly a half a century now, right? People believe in the work UN been doing. But we have of late seen a lot of private players also getting into philanthropic space and getting donation in form of crypto. And that sometimes creates challenges when it comes to the regulation part of it. Do you see that those examples leading to a little bit of de-acceleration of people interested in donating in form of crypto?
That's a great question. So the question of regulation comes especially after hearing what the previous panelist had to say. When crypto meets fiat currency, that's when it becomes very tricky. What we at UNICEF do, at least, is we receive crypto, we keep it as crypto, and then we disperse it as crypto. So that doesn't mingle at all with fiat currency. So that keeps it a little bit less controversial, and as well as protects us from the question of volatility, which will of course really influence these topics. And as long as there are people around the world who are willing to receive crypto and then put it to good use, then it works perfectly, actually.
No, I totally agree with you. And the last question to you, have you seen that because to reach some of the least developed countries on the ground, right, their currencies and their banking infrastructure is not that great. Crypto also trying to solve that problem?
I mean, generally, crypto may not solve that problem, I think, but there are startups who are working with a specific goal of financial inclusion. So a couple of these startups I mentioned at the beginning of the session, who we are personally funding, where the idea is to use blockchain technology to create some sort of a wallet which can be used by refugees for their purposes. Otherwise, they struggle to get even basic needs. So how can we make them financially viable to start with? So the banking system may not have a place for such people, those underbanked or unbanked people. So can crypto itself help them there is no one true or false answer for that. But I think a distributed ledger, a blockchain, which can be used for accounting and then to keep track of value transfer, that will definitely help. And then because it is transparent, and because it is trustless, because it is secure, and because of late these ledgers, there is higher understanding, they can be easily deployed. Yes, I believe it can really make a difference, and we are seeing it in the work of some of our startups.
Excellent. I strongly have this view that crypto can ensure that a lot of least developed countries where the banking infrastructure is not that great would get benefit a lot. And especially we already have an example of El Salvador, right? The right money can flow to those kids who need that support. Unfortunately, their banking is so broken that the support doesn't reach to them. Back to you, Breiksha, for the last question, last intervention from your side. How do you see that, as you talk a little bit about augmented analytics, right? How do you see when you're having the transactional data coming from all these blockchain pipes, right, on a real-time basis, especially in banking financial sector, can be used to drive more insights and more value, not just for the banks and the financial institution itself, but also for the consumer like me and you?
I think a lot of this data coming from this kind of network will be private data, as in owned by an institution, right? So when you look at all the data that will be generated due to blockchain ledgers and smart contract, which is a need of today, considering that there is a lot of compliance that goes into banking, trade finance systems, right? So making sure that the secure compliances can be created digitally, and you don't have to wait for manual intervention every time. A lot of AI systems will be put in place, and this data will be available in volume of billions of rows, right? So but needs to be made sure at this point is that this data is available and this data is usable with minimum discrepancy, minimum delay by the institutions which actually own these. And then this will also give a chance for those organizations, those data owners, to be able to create safe path for consumers to use that data, like you and I. And when we are doing our analysis, we'll know for sure that where this data can be safely used, safely accessed from, and then they can also have a view of who is using this data and what action they are being able to take with this.
Super awesome, Breiksha. I look forward to that day where actually, we'll have everything seamlessly in front of us. And we're already seeing that open KYC is helping the banks or digital KYC, helping us to get the credit cards and the bank accounts faster than it used to get just maybe a few years back. But also where I'm putting my money, spending my money, if that analytics can be made available based on my transaction, not just my credit card statement, that would be awesome. So with that, I thank Arun and Breiksha for a really interesting discussion. And I hope audience would have learned a lot from you. It was really refreshing to have both of you. Thank you.
Thank you, Deepak. Thank you.
Thank you. Thank you for having me.
Yeah. So now we move to the last section of our discussion, where we would be talking a little bit about the impact of blockchain on financial service itself. And let me see if we are having our panelists. So organizers, do we have our panelist? Tushar, do we have our panelists ready? So
Arushi, I think is there. And Mr. Mishra is just joining in 2 minutes. He's just logging in.
Fair enough.
Any moment.
So yeah, so we are having 3 panelists for this last session for the Global FinTech Summit. And I would like to first introduce Arushi Goel. She is Data Policy and Blockchain Lead in World Economic Forum. She is a specialist for data policy and blockchain at the World Economic Forum Center for the 4th Industrial Revolution, India. She works on strategic and governance issues related to data sharing through data exchanges, blockchain, and digital assets in collaboration with government and industry stakeholders. She is also leading a work stream on regulation of cryptocurrencies as part of the Digital Currency Governance Consortium with a background in law. She earlier served as judge in India. Prior to joining the forum, she was a legal advisor to emerging technology companies in India and Middle East. We also have Mr. Tushar Maheshwari. He's a successful serial entrepreneur with over 15 years of experience and knowledge across various industries and verticals, focused on key social sector, including agriculture, blockchain, base of the pyramid intervention, rural development, financial inclusion, women empowerment. He's highly active in for-profit sectors also, including pharmaceuticals, banking, insurance, capital markets, real estate, infrastructure, consumer goods, to name a few. He created various path-breaking organizations and assets in experimental marketing space. So welcome, Tushar.
Thanks for the intro.
And let me also introduce the third panelist. Somehow I'm not getting his. So I can just give you that, yeah. Mr. Saurabh Mishra, he's a Joint Secretary to the Government of India, Ministry of Finance, Department of Financial Services. He's responsible for all policy matters related to life, general and health insurance sector, including PSUs and private insurers, reinsurers. And Mr. Saurabh has over 25 years of experience in financial services sector in India and overseas market. Before joining the Government of India, he worked with Willis Tower Watson as head of client management and banking, financial service industry leader, India. Saurabh also served on the board of Willis Tower Watson India as its whole-time director and the country representative for Asia CFT, that is Client-Facing Technology Engagement Board. Previously, he was the group CEO of Muscat Insurance Company, SAOG, which is erstwhile Muscat National Company, based out of Oman. So thanks, panelists, for your participation. So Arushi, we'll go with you first. We would like to understand, how do you see blockchain infrastructure to enable or improve the efficiency of financial services, not just in India, but across the world, based on your experience?
Right. Thank you, Deepak, for that introduction, and hello to everyone. Well, we are actually seeing a lot of activity relating to use of blockchain in the financial sector. Interestingly, the 2008 Bitcoin white paper, if you read it, the first line refers to financial institutions. It talks about, there's a possibility of financial institutions creating frictions in the way electronic payments happen. And therefore, there's a need for a peer-to-peer network that does not have any intermediary. Well, that's a very decentralized approach. And it's fair to say we're not there yet. We are not in a place where it's complete disintermediation. But coming back to the topic, blockchain essentially, amongst other things, I think has two fundamental concepts. One, which is very relevant for financial institutions. One is it offers a single source of truth. And secondly is a security. Now, based on these two concepts, there are several use cases that are either being tested or experimented or are actually in use. The first one that comes to my mind is payments efficiency. I think just the fact that we can use blockchain to reduce cost and increase speed of cross-border payments. And this is especially true for underserved areas. That is where blockchain has seen some use cases. The other very interesting use case is that of trade finance. In fact, I'm sure this group would have also discussed it, and there's a banking consortium within India. I think there are about 15 banks who have come together to process inland letters of credit and over a blockchain network. And the reasons cited are A, it allows for faster settlement and reconciliation, and B, it avoids duplication of invoices, which again decreases frauds in the industry. Even the SME industry, providing trade finance to the SME industry, is something we are seeing that's happening globally. In the UAE, for example, there's been a lot of movement in that direction. And finally, capital markets. I mean, the forum did a huge study on the future of financial and capital markets using DLT. And there was some, I think, 80 organizations or so that we had surveyed and gone around talking to them. And the idea was blockchain is useful, especially where it comes to automating processes and for more efficient asset transfer, especially with tokenization. But we are not at a position where we can talk about complete disintermediation. We are still far from it. So having said that, what we're also seeing, aside from all these use cases, are challenges in adopting blockchain networks. The biggest one would most likely have to be the consortium building. Just bringing different stakeholders on a single table, at times even competing stakeholders, is very difficult for them to align and to agree to transact over a particular network is not easy. The second challenge that we've been seeing as a trend is most likely the fact that organizations have to have that mindset to move away from legacy technologies and invest in new technologies. That's, again, not an easy task. And finally, regulation. I think that the fact that there is still some missing pieces within regulation inhibits adoption. The fact that some kinds of physical assets or documents that are not recognized in law if you just digitize it, land records, for example. You have to go to a registrar's office to register it. If you digitize it, it doesn't have much value in the eyes of law to some extent. So all these issues are inhibiting adoption. I think at the end of the day, and this is something we keep coming back to, a lot of boardroom discussions happen around this. Why are we doing it? Just because we can, we should not be doing it. There has to be a purpose that we are trying to achieve. Are we trying to make our supply chains, for example, more robust, more transparent, more resilient, as we've seen in the pandemic times? If that is a purpose, yes, blockchain could be a very powerful solution. Are we trying to align some internal processes within an organization single-handedly? A centralized database could just as well serve the purpose. So I think at the end of the day, it's really about how we can create a positive impact for all the stakeholders in the ecosystem. And those are the conversations we are having, and those are the conversations we are seeing happening, especially within the financial industry. Thank you, Deepak.
No, sure, Arushi, it's always a pleasure to hear, the approach you have been taking. And the World Economic Forum has been doing a lot of interesting stuff on its own in blockchain domain for sure. And also even those who have engaged with World Economic Forum. For example, I'm having a lot of friends who are made in Davos, Tianjin, and Dalian, and they are the YGLs, so the young global leaders. They have come out with a joint effort to promote blockchain where it would be impacting both the industry as well as the base of the pyramid. So a lot of exciting work going there. So I would welcome Saurabh. Thanks a lot for joining, and it's a pleasure to have you, sir. My first question to you would be, sir, based on your experiences, we would like to understand, how do you see the neo technologies, whether it is artificial intelligence, blockchain, making financial service sector more efficient and effective when you talk with focus on India?
Thanks a lot. So I think, Deepak, I was very keenly listening into Arushi. And while I concur to more things which you kind of spoke about, both on the use cases which are already laid out for the blockchain to be clear winners, but also the ones which kind of are waiting in the wings. My sense is that blockchain is the first part of the entire technology that talks about not the digitality alone, or not the efficiency alone, but talks about the transparency and trust. And this is one thing which intrinsically or inherently blockchain does through its consensus algorithm, through its peer-to-peer connections, through its clear-cut methodology in which it concatenates and connects various people who are distributed physically or geographically. And to get them on the same page in terms of having a receive and the send of everybody to each other, so to say. It also kind of moves away from the eras of 80s and 90s, in which the entire databases and all those things were written around them in terms of structuring the data and then putting it into the algorithm in and out for its utilization. So blockchain is a nirvana to all those areas in which it can really permeate into. the areas of trust, areas of transparency, areas of collaboration, and areas of communication. So I think that to me is one of the basic things. Taking it to some of the technologies that you spoke about, yeah, I think that Neeti has been really kind of spearheading certain efforts, and I think we have a colleague from there as well, in terms of certain stuff which is coming up. DFS is participating time and again on that, on artificial intelligence, on blockchain, as well as some of the other deep techs. So I think this is one area in which there's a close collab that is going around, both at the ministerial levels or along with DT, as well as at the sector level as well. In terms of whether the same thing permeates into a new bank or a digital bank holistic avatar that we speak about, for sure, a bit of it is up for the grab. But I would believe that it's not just about the technology, it is also about the risk management, which one needs to understand from the perspective of a banking, which has been kind of a cornerstone for us for the last hundreds of years, and whatever kind of a possible memory that we have. There is a sense of credit that we all hold on. And banking is the more formal mechanism of holding that out, apart from, of course, the other things that it does to us. Blockchain, incidentally, has got fabulous use cases emerging around the globe on the digital lend side of it as well. And all the relevant front end and back end connects, which is the KYC, fraud proofing connect of that, as well as in terms of the assessment of where you are as a client, and looking at it not just from the AI and its machine learned algorithms, but also if we can concatenate the whole piece together and try and give that environment which is available to all, including the credit assessors or the analysts, but also to the ones who are finally taking it on their books, which are the lenders. So I think, Deepak, it's really playing out very, very well. Early days, I think for it to see what all kind of positive impact it can create, but goes without saying that it's a logical next of the deep tech as well as the industry of financial services.
That's great. Good to hear. And I love the clarity of your thoughts. In fact, both the gentlemen from government today, I love the clarity. Even Badri was very clear about where the government is going, and same with you, sir. Privileged to it's a music in our ears who believe the fintech is gonna be something which will spearhead India as a tech capital of the world. I go to Tushar. So Tushar, you have been an ecosystem builder working closely with the government institutions, startups, and doing a lot of events, as you mentioned, thousands of them. I would like to understand what's your play? How do you see you trying to empower or encourage or support Indian fintech ecosystem?
Well, thanks for the question, Deepak. Well, we, as we mentioned earlier, we have got a good, rich experience of organizing events for many multinational companies and corporates across the world. And again, similar events wherein the network sharing platforms we have, organized and be a part of that. So one thing is very clear that, of course, such ecosystem to really, to motivate such as startups and such technologies, one is networking. So here we come into picture. We have a great global network, and similarly, we have a great best practices also. So today, when the world is really global, we know which companies looking for what technologies and how to promote, how to really, in fact, introduce the partners to each other. So this is where we come into picture.
That's cool. And when you say that, helping tech companies partner and come to India, so are we looking at just the startup ecosystem, or are you also working with large tech companies as well?
No, exactly, with the large tech companies as well. So we are just not limiting to startups. Those startups, of course, there are many blockchain companies, but yes, in fact, the bigger players as well, because the idea is to find a solution. And idea is to, again, create the entire aggregator platform kind of thing. So the systems are huge. Even one in financial services, if you see, or even agri-tech, if you see, one company may not be offering entire solution. So solution comes in bits and pieces for a very particular target segment. Let's say in banks, for example, let's say there's a company I know, a very good startup company, blockchain solution for LCs. So they are only targeting the LC solution, the letter of credit, and then authentication. So one company is only focusing on the data storage and the data integration. And let's say KYC, as mentioned by Honorable Minister Sabar so earlier, that they're also contemplating with the eKYC, wherein not every bank has to go for that. So these solutions, but what if the bank has to complete the whole system basis on technology. So we are bringing the startups, or let's say the companies, be the big players or smaller companies, at one platform to complete the process.
Excellent. As you mentioned, eKYC, I would look government supporting more open KYC, because that also gives possibility of monetizing a lot of data and removing the application of effort, which is being done by multiple organizations, multiple banks. So I think that would be a pleasant change. And if it is on blockchain, it ensures that fairness and transparency as well. Back to Arushi, we talked about blockchain as a little bit of infrastructure, whether it is for public or private activities. I would like to understand, how do you see blockchain as an asset class? So we have seen from stable coins to altcoins, right, to NFTs, right? And there is a lot of talk around it, right? From exchanges to cryptocurrencies. Yes, Bitcoin, I'll say that it has been there for now close to 12 years. And it is going pretty strong even today. So how do you see, in your view, the whole maze of, I won't say currencies only, but crypto assets or blockchain-based assets? What's your view on that?
Right. Well, thank you for that question, Deepak. Very interesting and something very timely, in fact. So crypto ecosystem is huge, right? We started off with a white paper, and of course it was built on the shoulders of giants. We always had, since 90s, we had distributed technologies and smart contracts and cryptography. So all these things came together in that white paper, and it gave birth to what we now know as Bitcoin. And after that, there's been tremendous evolution of this ecosystem. We had Bitcoin, Ethereum, and it was very fascinating to understand just how you could transfer value without intermediaries. You could build applications without intermediaries. You could transact cross-border without the need for really involving any third party. And today, as we move into this, we are seeing non-fungible tokens. People are collecting them, apparently. The people are using it for brand engagement and for millions of dollars, right? Something that's been unfathomed for so long. We are seeing stable coins hearings happening all over, and they're pegged to either a dollar or a basket of currencies or some assets, and to stabilize that volatility into the crypto ecosystem. Interestingly, we're also now seeing a lot of conversation happening around DAOs, decentralized autonomous organizations, which in a way flips the way we organize our corporations, the way we function. It's all just code, and we can design it in any way we would like it to be. So all these are innovations that are happening at a very fast pace. You mentioned about Bitcoin being an asset class. Well, I would say, of course, it's an asset class, and that's what's probably touching the masses to a large extent. But as a way to transact value in a very different way is what's really capturing, a lot of interests. And just yesterday, I think I was reading about it, how the total transaction volume has grown almost 550% from 2020. And for the year 2021, this was about $15.8 trillion. That's a big number. That's a big number for an industry that just came up. Paper came out 13 years back, but the industry came up about 10 years back. So that's huge. And that's probably why we are seeing that, and of course the fast-paced innovation. That's why we are seeing a lot of interest in Bitcoin as an asset class, or generally the crypto ecosystem, both at the industry level and at the policy level. A lot of conversations happening, a lot of investments happening, a lot of people transacting through peer-to-peer or exchanges, custodians, brokers. Every day there's a whole slew of companies that is coming up, and there's a whole thought process about how we can create value from this and how it should be regulated. Now, regulation I talk about specifically because it's very important for any crypto that we see as an asset class, right? Recently, our budget announced 30% tax on crypto profits. it was a huge respite to the industry, which was actually looking at news of getting banned a few years ago. So a lot of clarity, a lot of happiness, but then the news started to sink in. 30%, that's a lot. That's probably the highest bracket we've got of tax in the country. That aside, I think there are a lot of other questions that we're really looking for clarity. And the way, and Mr. Saurabh is here, and really appreciate his viewpoints on how open the government is. And we're seeing that they're quite progressive in terms of accepting new technologies. So I think we're all looking for more clarity on these taxation provisions. Are you just going to tax on-ramps and off-ramps? Or are we also going to tax crypto to crypto? If I use Bitcoin to buy an NFT, is that going to be taxed? If I swap my Bitcoin for a USDT, is that going to be taxed? We don't know the clear answers yet. Globally, we don't know the answers. And this is not just about India, right? 1% tax deducted at source. Great on the clarity, but what about if someone's interacting with exchanges or brokers or custodians that are not in the country? How are we going to look at that? And that is where I come to another point, which is on CBDCs. Interesting development. Looking forward to hearing more details about it. In fact, as a forum, we did a very comprehensive study last year on stablecoins and CBDCs. And across regulators and private industry, the three issues that came up were of critical importance. And we are looking at some more discussions around it this year as well. The first was on the technology platform. Why a CBDC is necessary? What kind of technology platform would enable that purpose? That is very important. The second is interoperability. Is it going to be interoperable with other countries' digital currencies? I think that's important. And at least as a discussion point, it's very important. Privacy concerns, that's something, especially in the academic circles, that's a huge point of discussion. Again, something relevant to think about. So at the end of the day, to be one side is, of course, people investing in these assets and creating value or making money out of it. Let me put it as crudely as that. The other aspect is at the policy level. And at the Digital Currency Governance Consortium, that's exactly what we're thinking about. We are thinking about, why do we need to regulate this? What is the social impact of these cryptocurrencies? What is the macroeconomic impact of these cryptocurrencies? There is an environment impact as well. And what is it? Once we know what it is, then we can have more evidence-based regulation. The second is, how do we regulate it? We still don't have a common taxonomy. If you read 10 white papers on stable coins, they will all be defining stable coins differently. How is it pegged is going to be different. How is it going to be redeemed is going to be different. We just have no uniformity. In the absence of a common language, how do we intend to really regulate it? That's a huge challenge. And third, and I think the one that's really important, is a lack of a global consultation on this. There's a lack of a global coordinated parity approach on regulating crypto ecosystem, whether as assets, whether as store of value, whether as payments. There is a need for it, because otherwise we're just creating more opportunities for jurisdictional arbitrage. Companies who cannot then do business in one jurisdiction will move to the other jurisdiction, just because we have Chinese walls constructed between countries. And again, this is not something new. This is not specific to any one country or government. This is across the perspective that we are seeing across the value chain. I think at the end of the day, we really need, especially in the crypto ecosystem, for the public and private sector to just come together and to see how we can leverage all of the good qualities, and there are a lot of them, how we can really leverage that to the benefit of all stakeholders, to benefit of everyone. And you only discussed use cases on aid disbursement and financial inclusion. That's possible, but in what way and how is what we really need to determine. Thank you.
Sure, very well articulated, Arushi, and I totally agree with you. See, the biggest problem or biggest challenge out of the 3 points you made, I'll say the interoperability, not just with the other CBDCs, right? Also with other cryptocurrencies. And that is where, whether it is the regulators or whether the government, they have their limitations, because it creates a lot of uncertainty and volatility. Suddenly you don't want like this $15.7 trillion of transaction, right? When it is going in one direction, it can break a central currency. And because if you put all the digital transaction happening in India on an annual basis, for example, 2021, it was roughly at close to $1.2 trillion. Now you talk about 15 times more transaction happening on a crypto, and even a big country like India. And one thing I can assure you, though I'll say that I'm not part of the government, but I had opportunity of working very closely with the Honorable Prime Minister himself when he was Chief Minister. And I also had opportunity when he was talking in Singapore at, I think it was Singapore Fintech Festival 2018. And he understood blockchain and its implication even that time. When he said that, actually, I'm just trying to state roughly what he said, that in case you want to raise 5x, then talk about platform, not business, to the VCs. If you want to raise, I think it was 10x or 20x, right? Talk about fintech. And if you want VC to empty his pocket, use blockchain, right? So he had that vision and clarity in 2018, right? And not too many people were talking blockchain that time. So he had the vision and the visibility. And now back to Saurabhji. Saurabhji, we would like to understand from yourself, some of the aspect, if you want to, talk about what Arushi just discussed about the regulation part of it. And also I'm having one question, because from the insurance sector, we are seeing the world is moving towards parametric insurance, where everything becomes automated, where if event happens, it is recorded, right? And especially I'm talking from some area which I'm passionate about, agriculture, that if there is bad weather, everybody knows about it. Meteorological department tells it to the whole of the world that we had floods. Now, can we just, that parameter become something which triggers a mechanism where the farmer gets money straight away delivered to his account, rather than going through his long claim process? Your views on how blockchain can be used in insurance sector, and if you want to respond to something what Arushi said, sir.
Not much to what Arushi said, I would want to respond. However, I think if I have to have my way of looking at the lens of blockchain and therefore how it connects to the country and what has been our way forward, both from the efforts of the ecosystem provider that the government must play the role, and the effort of the players into that ecosystem, that is what the industry should play. So I think the roles are very categorically defined, and the two have to tango for it to make a great grand success of blockchains in the coming decade. I personally feel the bigger two blocks which need to be discussed at this moment is less about whether it's an asset or a liability, or what kind of asset. Should we put it in digital, physical, social, or, the first component about the ecosystem is the infrastructure. And the second is the governance. And I think both, as we speak, has got some miles to travel deeper in the blockchain space. Infrastructure, in terms of Arushi would bear it out with me, requires a huge changeover process if we have to really turn from the today's systems to the blockchain-based system. And I'm talking about, let's say, on a public service or a public distribution basis. It needs huge amount of change, which can run into resource heaviness and into both the actual money resources as well as the people resources. That's part one of the blockchain. Your size of computes, your quality of, possibly the 5G and so on and so forth, the speed of compute and blah, blah, blah. If you have to really see the best of what the blockchain can deliver, we need to have a almost fundamental replacement, or not an incremental changeover into the tech stack. That's the first point. So therefore, if we agree in pieces and portions that, okay, the trade for India will be blockchain, or the remittance will be blockchain and things of that sort, each tick will be worth the size of billions and billions, kind of investment which go into that, is the way I would see it from the ecosystem perspective, the way typically, a government should think about. The second is about the governance around that. And I think Arushi did point out a few things about the taxonomy itself, which is not just clear among us, it's also not clear around us. So, both ways, which means that not just the people who are sitting out here, I don't know whether the folks are from law background or from infra background or from social background or from anthropology background, it kind of connects the dots when we think about a blockchain ecosystem, and not just to the money and therefore to the 4 or 5 use cases which keep glamorously getting advertised all around. So that's, to me, is blockchain. And that's what, as you rightly said, quoting Honorable PM as well, I think possibly it kind of tangos to each other, that is one. And I think these are the questions we should really start getting deeper into, including this workshop or this seminar, and lots of thoughts which must flow in all democratized manner on how do we really quickly get to the level of infra, which is blockchain infra, whichever 5 or 4 use cases we kind of prioritize. And second is the blockchain governance. Once we settle it out, I think things begin to get into the mode. As Arushi already said, that the recognition has already happened in terms of understanding that so long as there is a trade, so long as there is a connection, there can be a bit of text to it and so on and so forth. So I think that's how it will kind of create the underbelly or the defining line with the blockchain comes up to the next level. The way mobile phones came up, or the way JAM came up for DFS kind of things on Jan Dhan Yojana, which is as high as around 5 or 450 millions today. That's quite a number on which India kind of transacts at the defining bottom of the pyramid through which the transfers of benefits are taking place. Help is getting rendered, and that too in the account of a person, direct and straight through. Same thing goes on to the insurance aspect, Deepak, which you spoke about. So I think most of the important part which insurance is served by, including the pandemics or the nat cat events and so on, is the reinsurance part, without which people don't budge. I kept trying to have the health benefits and health indemnities across each CEOs, and they had those stock replies, sorry, reinsurers are not supporting us. So I think it's time that we saw those blockchain elements coming up at least the insurance level to define, size, assimilate, and price some of those risks in a very transparent, distributed, aggregated manner, so to say, to reach to those complex decisions that, let's say, if X trillion is the cost of COVID for India and the health side, how will it really be panning out, across 5, 6, 7 such biggies who are looking their lost data, and if not lost data, the simulated data, because most of the lost data is not available for those events who have played out for the first time. So I think once that trigger happens among the reinsurers as well, I do believe that Western Europe and UK, some stuff is going around, Deepak, at the, again, nascent stage. But then if that percolates. Second is about the smart contract around insurance. So once we are to the next level of, having a clear-cut trustless contracting between you and I on how the blockchain can deliver that on a particular event triggers X $1,000 get moved to you, or Y thousand, equivalent of that, the stable coins move to me. Some smart contracting will help, which again will require a bit of legality to be clarified and sorted out, a bit of who is the final responsibility to which the A to B ownerships are moving and so on. So I think this is where I see the insurance use cases on a large scale basis. And agree, since you spoke about, yes, certainly I think parameters are already getting defined through the parametric solutions which are coming up. And as we speak, apart from the PM Fasal Bima Yojana, which is run by the nodal ministry of the Ministry of Agriculture, they have got a parametric solution as well today as well, which is already beginning to help us out for simulating the weather events basis the lost data and therefore the projection of that and how we can do that. But yes, certainly, I think we can have a number of such solutions coined up wherein blockchain can be a help, especially the community, which is a farm community and the producer community and the user community, and finally the consumer community. I think as I speak, I can see some cases emerging, and that's the beauty of blockchain, that you can really coin things out in the way you wish to. It's a powerhouse. It's the way you want to use it. Thank you.
Totally agree, and got this phrase now in my mind. It's a powerhouse, so I'll be using far often. So thanks. It was pleasure listening to you, Saurabhji. Very refreshing, very refreshing. Tushar, last question to you. You have been invested in fintech ecosystem, right? Where you are going to put your next bet? You have heard from all the dignitaries today since the morning, right? And how do you see, this whole ecosystem getting funded?
Well, Well, definitely. Of course, my best bet is going to be technology. That's where the world is heading to. And the best positive changes, I'm sure the technology can really change and solve those issues which are not being solved. In fact, I believe in last decades, or let's say even a century, what I believe, strongly believe. And as I said in the beginning as well, that blockchain is something we can look up to bring trust and transparency in the whole system. The moment you have a transparency, it creates and builds trust. Now, secondly, coming back to the whole funding part, is actually we are planning to create, the entire knowledge and networking platform. So idea is that today we heard many good concepts, great concepts here today by our esteemed speakers, and now exactly where the gap is, as Arushi also mentioned initially, that one platform where all the stakeholders are aligned. So now different people are working differently to maybe find the same solutions, or maybe a common platform where you get all the best practices. Maybe some marginal entrepreneur has a solution in Africa, but what if that solution is a path breaking or something here in India? I'm just sharing that technology is not bound by barriers by anything. Now what we have designed here to address this is a global series of events. By a series of these events, we'll be actually identifying the talents and creating the network sharing platforms. Moreover, like you must have seen, a Startup India, they also do so a lot of companies, when they have issues or problems basically, and they want a technology solution, they launch it. They encourage the startups to come forward, and if the solution is great, the VCs are also aligned there. Similarly, we want to create the same platform. We are already in touch with a lot of VCs. In fact, in our past summits, a lot of top leading VCs are part of us. And sometimes most of the banks or most of the institutions, just not in banks, a lot of corporates also, they've set aside a fund, where in this fund, they're targeting for the solutions which are industry specific. In fact, most of the insurance companies like HDFC, even Kotak, they already have these funds aside. This Startup Evangelist is the another division which they have already formed. Similarly is with everyone, even including Mahindra for architect solutions and things. So again, how do we reach out to the solution provider? This is where we come into picture. So of course, funding is not an issue, provided there's a solution, and there is a problem as well. It has to do a matchmaking. This mapping, what we are trying to solve this.
Perfect. So thanks all my panelists. It was pleasure having you, and we had a really insightful discussion. Thank you, Arushi. Thank you, Saurabhji, and thank you, Tushar. Pleasure
So
talking to you.
Thank you, everyone. Have a really good day.
So here we come to the fag end of this total discussion we had today. We had in the morning esteemed minister talking about the great things, what the government is doing to promote, facilitate, and utilize the powerhouse called blockchain. And then we have Badri from Niti Aayog talking about what the government has done over past close to half a decade in untangling a lot of challenges which is happening in fintech sector. And today we are having a very robust fintech sector which has created 17 unicorns. So with that, I would like to end the session from my side. I request Tushar to take over and do the vote of thanks. Thank you, Tushar.
Well, thanks everyone. It was amazing, and thank you. I would really especially would like to thank two people here, Mr. Deepak Pathik, of course, and Parul Sood and entire team of E3, without whom this summit wouldn't have been possible. And of course, all the esteemed speakers for really taking out time for this summit and sharing this important knowledge and information here. Post summit, in fact, all of us, I mean, we're gonna share the snippets and in fact the entire proceedings. We're going to make it public, and we'll be reaching out for more and more such knowledge sharing platform with you. In case any other queries you have, guys, please feel free to reach out to us for that. So thank you, everyone.